Good morning. August 31st, 2023. We're going to be streaming stocks, options, futures trading. Sub up, like up, comment down. Happy Money sticks around. You can follow us on Twitter at HappyMoneyYT, as well as our Discord server. Link for those are in the description. Excuse me. I'll also put a link in the chat or Discord. Hope you guys had a good morning and good rest of your evening last night. We had PCE data this morning. Let's see.
The nighttime you didn't get my list.
We'll be watching SPY, GME, BBBYQ, AMC. Got some movers. Looks like GNS, InfoBirds gapping up. AMC gapping up. Rite Aid's a little Rite Aid rally. Still in that channel actually. Rite Aid. That's not bad. SPY very choppy this morning. Up 0.25%. Not here. Keep an eye on SPY here for a bit. GNS little gap up, 5%. Kind of holding the same horizontal channel from yesterday. AMC continuing to bounce up 7%. GME is flat. SPY's coming up here a little bit. Barbecue, just getting to the end of that little triangle there. You can see it literally just hit that resistance and the support. Which way it breaks out. Hopefully today or tomorrow we'll have some direction on it, whether upside or not. Go SPY, boy. There's a new high there on SPY. Yesterday was a chop day. Maybe today will be a continuation. See. I gotten some puts earlier. I'm in calls now. Yeah. Not much direction yet. Very choppy. Close one of those calls there. if we get a little breakout here. BBBYQ 1.3. The 6.5. Thought about adding to barbecue if we get a breakout. How are you guys doing? Christopher, thanks for support. And a late start this morning. Appreciate your thumbs up. 20 Bubblicious. IFBD, that's sold off quite a bit. But potentially the direction is flattening out at least. Today's move. Up, Kitty. Morning, Tasty. On Annan. You want another Lambo? For the wifey? Jimmy Moon? I don't know. I think we've gone to the moon and come back already. Bet you weren't on that trip. Yeah, Spy's on an aggressive mission just to fill this gap. Kinda crazy. Close out another one there. Like to get high of the day maybe? Or pre-market? GNS coming down there a bit. Up 2%. Aloha Maui, future lows on barbecue, dip buy. Yeah, if it breaks to the downside here, then I think so. Breaks the downside of this wedge it's building. Yeah, I mean, I think if it breaks like 19 cents, then I think we can say 16.50 again. And if that breaks, then 10 cents, 13 cents, lots of options. But if it's moving that much to the downside, there's probably fundamentally bad news, meaning it's not something to buy because we're just being liquidated as shareholders. Otherwise, this is your dip. Because I see it breaking more to the upside than the downside right now. Given that it's had all its momentum down, now we've flattened out. It seems like the trend is reversing. Yeah, choppy morning on SPY. Chop chop. I think we'll get some continuation today though. Just based on yesterday being a top day. Please do. See Carvana. Carvana doing the cup and handle thing. SPY a little more. I closed out of my calls. Teladoc's up 0.77. First Solar's up 2.3. AI is down a quarter. Earnings coming up. Dishy doing? Dishy's up half. Funko still climbing, 2%. Alright. Fisker up 1.9. Joan up 1%. Joby down half. Ending Club is flat. Lucid's down a quarter. 638. Palantir's down 7.5. Rivian 2%. Pretty big bounce on Rivian, 23.33. And Barbecue up 1.5. KBNT up 1.2, but no, it's KB. KBNT down 3.8. What's Liquor doing? Liquor might be double bottoming. What it looks like. Hopefully it's not just consolidating before more downs. It's up 4.85. Got Hawaiian up 2.7. And AMC giving back some, up 1.7. Direct's up 7. Got eBet up there. GNS is now red. Coming back down to VWAP. Dry powder's burning a hole. Yikes. I don't know if I'd put it in a barbecue. Unless you're planning on doing it for a trade or getting out. Or if you're just trying to add to your position to hold and hope. It's the last day of August. We had initial jobless claims, personal spending, PCE, or PCE. All that day this morning. Not a huge reaction. SPY is now below VWAP. I guess my trade with barbecue right now is just pretty much TA. I kind of want to have a little exposure also in case it does, of course, go crazy. Because I realize at any point I could basically be locked in. So, bit of a trade, but trying to keep that in mind with my position sizing. Bouncing off VWAP, very choppy this morning. Run is up another 3%. Run, baby, run. Bounce off those levels. Yeah, bounce on dish. AMC up 1% now. Back most of those gains. Teledoc's up 1.5 now. Got a nice bounce off of that support as well. The VWAP. Confluence up 2%. Me. Barbecue hanging around 0.5%. Okay, 250,000 shares. Go down and bought some GME noise. Yeah, that's quite a bit of an exposure to a company that's seemingly dissolving all of its assets. I think you'll get another dip on GME if you want more on that. I mean, we'll see though. It's earnings up to earnings now. Could have a gap up too. At the chart though, I think it looks like we're gonna get some kind of double bottom, I think, still. Alright, chopping right back up. Chop chop. % on open door. D 1.5. GNS up only 0.5% now. GME is green, 0.5%. Barbecue still stuck in here. 1.5. Breakout Friday. Good morning, Lords. That's now red. Had really respecting that channel. Could be making a bear flag though. It's yeah. Like GME gaps down, back down to these lows in earnings. Not a big move. Stays kind of in this range. HK, one of more OTC rolls? Good. Good service for you to do. I didn't notice that barbecue isn't caveat emptor status. It sounds like a Disney movie. A Disney movie with a pirate flag. Sounds like one I'd like to watch with my children, maybe. Hey kids, gonna watch Caveat Emptor? Alright. Yeah, we're gonna watch it. Okay. What does it matter, Lords? What does it matter? Barbecue. Pink limited information. Grace period. Delinquent SEC reporting. Bankruptcy. They're not reporting, apparently not, is not current in its reporting obligations under Section 13 or 15D. I thought they were reporting all sorts of stuff. How are they delinquent in their SEC reporting? Not good. Security has entered a 15 calendar day grace period before it is downgraded to the expert market because OTC Market Groups is unable to confirm that the issuer's disclosure is current and publicly available under Rule 15C211. So this is that that window you were talking about. 15 days. I don't know when this was updated though. Why aren't they, why are they delinquent on their SEC reporting though? This UIBO. Pink limited information. Caveat emptor. There's that movie, kids. Let's watch it. It's on right now. OTC Market Group has determined that there is a public interest concern associated with the company. At least their company profile is verified. They have a verified transfer agent. So the grace period's up on barbecue. I don't know when this is. When was this? When did it enter that grace period though? $31. Oh. Where do you see when the grace period was established? I definitely want to be out of this thing before that grace period's up. You can't see when it was established. November 12th is also when court deadlines, I think, too. GNS down 1.5 now, wow. Last week. There's no way to check when that was established though. That's pretty whack. When did it change its status? Or when did it get this grace period? GNS coming down 4.5 now. Barbecue's now a little red. Still not trend though. Good. I did 6.4. Need 2%. Last week. Don't know how stocks work. Doesn't have a buyer beware symbol. That doesn't mean a whole lot to me. It's under grace period. So if it's not grace period, it's going to be probably buyer beware or whatever. Still has plenty of warnings. Warning, limited information. OTC Markets has confirmed this company's limited disclosure. Yeah, they're delinquent on SEC reporting. Warning, this company is in bankruptcy. You're just ending this grace period as this instead of buyer beware. Once that grace period's up, though, it'll probably have that bull and crossbones. Buyer beware. Doesn't really matter. GME popping up there, up 1.2. New high. Once the grace period's up, doesn't it go to some other status? Oh, it just goes to Dark Expert. I just don't want to be in it once you can't. Once people can't buy it, I don't want to be in it. I think that's where I'm going to draw the line. If you can't buy it with most brokerages that you can buy OTC with. I mean, we've killed a lot of the buying power already, just being on OTC. All these OTC names, it's like a RPG video game. Short Disney? I don't know, aren't they at like the lows? Haven't they been kind of clobbered already? I wouldn't be shorting Disney here. This is a nice long pickup probably. On this $80 support. Barbie should be tanking because why? I mean, Disney has a lot of different income and like revenue sources. It's not just streaming. That's their newest thing. We got their merchandise, which is actually huge. Of course, their theme parks, which is original. Not interested in a long place, looking for shorts. GME's only long, everything else is short. You're saying it should be going down because it's under a grace period right now? Yeah, but maybe this is as low as, you know, this is where it's found its equilibrium, where the buyers and sellers have agreed on the price for the risk versus the reward. That's always what the price is if there's legitimate price discovery. If more bearish news comes out, I'm sure it'll come down. If it's not viable without making a phone call, I'm assuming that'll affect the price as well. Iger's back into it. There you go. Deal with pen. Pen gaming? Yeah, I mean the chart looks like a nice pickup along, honestly. Stop thinking for myself. I mean the Theta Farm. Theta Farm just gives you ideas. It's not for brainlessness. Pretty good continuation here on GME, up 1.5%. Yes. So I think there could be selling pressure before we go to dark. That is if people know. But most retail, as you have explicitly told me, doesn't know because you've been educating the PP show. And that is where a large majority of retail listens at Hold Barbecue. That's pretty good. And gaming with Disney, ESPN. They don't care about that stuff, Dark, because they're Earth Lords, because they're holding it until it's completely worthless, or until Ryan Cohen saves the day. If it gets cheaper and it gets harder to buy, that's all they want. They don't care. They'll make phone calls. They'll sign letters with checks in the mail to buy more. Like Jenny said, you want it cheaper, so yeah, you'll mail a check. I mean, yeah, if you're so confident in shareholder value, then sure, do whatever you have to do. I might be about to sell it though, actually. I don't want to see it break this level. Buy's climbing up here. It's distracting me. This is the pre-market high. Just been a chop grind up so far. Don't like it. Don't like it. These are not my favorite days so far. Good. Okay, I gotta take a break. I wanted calls there. I had it queued up for puts. Didn't even check. I just got puts. So closing. Oh, I bet I don't anyways. This chop is messed up. Met up. Yeah, I don't think it'll hold this line. I mean, it might, but I wasn't necessarily going to cut it if it doesn't hold this line. It was more this horizontal. I was going to give it a little bit of breathing room. 1911. But it might do like a 20-cent support, 20 even. Back in here somewhere. Well, that's why I was expecting it to break out, because it kept holding this line. But it hasn't yet. Patiently waiting. The buyers are willing to buy it at a higher and higher price. Sellers are selling at the same price. Eventually, boom. Just did wait. No, not really. I'll keep this line here, but I have horizontal supports too. This is just, it does keep holding it. It's there. I could add, like if it comes up here and it rejects, then I want more. I could wait for it to come back to test this line. But yes, you do have to make adjustments as time goes on and new information is provided. Like anything. Not to feed any bias or narrative. It breaks certain levels and that's where you want to call it, then call it. But it's all up to individuals. Like, maybe someone doesn't want to cut it unless it breaks 1651, and that's perfectly fine. Okay, is this the top on SPY? Little double top pre-market. Maybe. GME is quite strong today. It's getting a little pre-earnings run up, I'd say. 2.18%. Next Wednesday they have earnings. GNS is now down 5%. The fickle one. Brad holding its 4%. AMC back up to VWAP 4%. Complimented my T line yesterday. I don't remember, but that's all right. Thank you. TA on barbecues. A little silly when you have those huge wicks from court hearings. Gonna have to just disregard those, because then it falls back in with price action. That was already kind of playing out, oddly enough. .5% on run. She's up 2.5. 0.5% ish. Bump. Chewy's coming up. 5 shops around here. Did get some puts just near the hive. Free market. Pretty basic entry. But practice risk management still, of course. $45. AMC just above VWAP. Bodied candle down there. We'll see if it gets an engulfing candle up here. 5 minute. VWAP's pretty high. See the trend though is kind of starting to slow. Pretty steep up here. Now your peaks are getting less aggressive. Oh, potentially starting to roll over. Do still have that gap up there though. Looking like it's setting up for a long time of just range bound and chop, unfortunately. I don't know. Just done this huge move without any really pullback. Got a nice amount of liquidity for this left shoulder though from yesterday's range bound trade. We're building ahead here. Nice move for shoulder. Gap fill. Here's SPY coming back to swap. Swap on SPY. Not affecting GME. Look at that thing go. 3%. Wow. Or if this is some like no, they can't buy right now actually. Huh. I'm surprised by this bounce being this large. This is kind of that first resistance. Here's the next one, so see what happens up here. Setting up for a little sell-off from earnings, perhaps. We'll close the contract to BWAP, but I'll wait. I think double top's good. I think this being ahead could play out. And that would give us a lot of room the downside today. But we're still upward channel. Chop. gonna add some puts on this pullback actually. Like that last 5-minute engulfing candle. Added there. Could have just been a move to VWAP for liquidity to keep going too. Dang it. Yeah, see these lows? All pretty. No. Hate trading around VWAP. It just always lines up that way. Purpose 3.3% on GME. Oh, that's quite the 5-minute open on GME. Look at that thing. Impressive. Own is up 3.8. What did Linux say about it dropping down on Thursday or Friday? Morning, Guts. Almost 4% on GameStop. Dude, this thing's kind of waking up a little bit. Look at the volume increasing. What? Little pump fake maybe, but 4.25. AMC potentially also up 6.5. Well, we're getting up to this next resistance. See if it gets shut down here. It might, right, with a SPY dump. SPY flushes through VWAP, shuts down GME's rally right on its resistance. You almost get your SPY puts just as GME is hitting resistance. Watch this. For the 5 minutes you can see it. That SPY through VWAP. A little below VWAP. Starting to flush a little bit. GME almost wicked perfectly to our line. There's the flush on SPY. Shut down. Shut her down. Oh. Bye, fleshy flesh. Got a gap to fill. Right shoulder to build. and these rallies. Just a little liquidity pump before pump the IV on the calls. Oh, it trades down below this resistance. Barbecue up 0.5%. Alright, climbing back up to VWAP on that candle. I think we see a gap fill though. Be 450. Big pounce on SPY, look at that thing. Another opportunity to get some puts there. Come all the way back up. Barbecue should be rallying, lords. Stop it. This ascending wedge, man. Oh. About to break out of that 22 cents. Retest 24. On up. 30. 40. And then it can dump. I seriously did number on market makers. That way down there, it's crazy. Ah, there's your reload. Very interesting if SPY kept going up from here. Highly unusual. GNS 1259 down 7.5 bucks. Okay, it's going for that 111 support again. See, holding 6%. GME shut down right there. The option IV up to 150% maybe on the weeklies. Yeah, I don't know. I mean, you watch OTC more than I have. Never watched it, so I know enough to know that stocks usually just plummet on it though, and barbecue's been an anomaly ever since it entered. So that's been a bullish thing for me. As far as more bullish for OTC, I guess, than barbecue itself. But yeah, it does seem like something's up with this stock for the way it behaved into OTC, and then since it's been on OTC. Disney kids watch the Bible. What? Being cool to your children is having them watch Disney. Liquor might be bottoming out here. Long overdue. Me, four and a quarter. Pretty good volume this morning. Not liking how Spy is hanging out up above VWAP. Chop still. MACD flipped over. Right under the 9. Take some time. Take some time for this thing to come on down. He's still hanging out at the highs up there. Trying to consolidate. Gotta catch all the FOMOers. Last time GME had a pump on its borrow fee. Legitimate pump was right here. Day after earnings, way up here. But it just came down ever since then. Around earnings is when it happens. And before that was after earnings was down here. Borrow fee started pumping up. High back below VWAP. Me still hanging out up there. Bad.
Is that the work they've done to cut expenses and improve their bottom line is starting to work. The stock is currently up, just under 4% as we get to the 10 o'clock hour, Nicole. Also, a thing on the Salesforce, they're combining with IBM to announce a collaboration aimed to help businesses accelerate their adoption of
holding
AI
up really well
for Salesforce. So you know, Nicole, anytime
if it breaks this, that'd be pretty big.
In any discussion,
looking for a gap fill, $20 probably.
Yeah, without a doubt, no doubt. How about Dollar General? This one has been hit hard today after its quarterly report, and we're also seeing some downgrades too.
Different story out of Dollar General, and the question is this a Dollar General specific problem, or is this some a look into what's going on with the U.S. consumer, Nicole? Dollar General, a big miss on earnings.
LST.
They came in $2.13. The expectations were for $2.47 a year ago. They made $2.98.
Oh man,
revenues, sales, $9.79 billion.
Might have a little bounce back to some moving averages, but
higher than
it wants
a year ago,
$1.
less than the 9.92 they were expecting. They also expect 2023 earnings per share, Nicole, to be down 22 to 34%. So the guidance,
or at least $1.50.
Good. As you, Oppenheimer analyst Rupesh Parikh downgraded
volume's picking up on this selling off.
This is not good. The firm's $195 price target. So downgrades there for Dollar General, upgrades for Salesforce. Two stocks in two different sectors of the economy going in different directions, Nicole.
All right, thank you. Kevin Hinks, great to see you. Really
beat a bunch of companies like Google for stealing patent tech.
Oh,
they're one of those companies.
On the markets. Eddie Gabor is with
just hold a bunch of patents.
Lawsuits. What are your thoughts here today? We saw PCE coming in line, fewer claims, but
all right, SPY's come down a little bit here.
I was saying that in the beginning of the month, you had things a little hotter, and things have been coming in a little lighter at the end of the month. I mean, what are you thinking here?
Yeah, so look, I think one thing that really stood out today was the core inflation number showing a little bit of an acceleration. And I think the next major move in the market, up or down in the near term, is really going to depend upon inflation data. You know, we'll get CPI next month. If we see that inflation is tame or is decelerating still, it's going to probably be very bullish, and you'll see that trend continue upward in the equity markets. But if we see inflation looking as if it's going to accelerate, you know, you mentioned oil prices earlier, now at over $80 becomes problematic. So I think that going into this next month, I think you could see a lot of similarities that we saw in August, where you're getting a lot of mixed signals. That's going to cause still a lot of volatility in the interest rate market. Nice price. The bond market, especially when you look at the 10-year, has really been all over the place this month, and now we're at the lowest level we've seen in a few weeks.
Flipped over on the MACD.
If we get a hot inflation number, that could cause a 10-year note to go back up to recent highs we saw this month, and equities go down another 2 to 3%. So I think we're going to see a seesaw here back and forth over the next few weeks as we get this economic data, and that's going to really set us up for the rest of the year.
Understood. So at this point now, I mean, what are you thinking the Fed may do, and how important is that decision to where we go for the rest of the year? Because you have September and November.
Well, look, I think one thing the Fed's done a really good job of is telegraphing what they're going to do. I think at most you'll see one more rate hike, but one thing that I can say, I think with certainty, is there's no rate cuts. So from a best case scenario, there's no more rate hikes, but we're going to keep rates at an elevated level for a long period of time, longer than I think many people realize. And that's really going to really tell us
lower lows, lower highs,
how long the consumer and corporations that need to refinance debt, how long they can continue to operate successfully with earnings accelerations in an environment that we haven't seen in a long time.
Understood. Tell me about some of the investment plays. I mean, we're looking at Japan and India with faster growth, like 6%. Are those areas, I know India may be of interest to you, right?
Yes, it is, and both have had good
years.
Our actually our largest equity position right now is in India because
When it comes back to
we're looking
300,
at
my
the
trading window
dynamics
closes.
there, and we're seeing
Why those trading windows work.
economies accelerating. And I think the big picture from a long-term standpoint is they're really going to benefit from what I like to call the tech move from China to India. And so I think you're going to see a lot of companies continue to invest. So to us, it's still early innings there in India, which is why we're overweight there. We're still cautious here in the U.S., but hey, high rates aren't bad for everybody, right? Retirees are getting yields on money markets and short-term treasuries that they haven't been able to get in a long time. So many of them are able to kind of sit back, collect a nice yield, and pick their spots in regards to where they want to take risks to try to get that extra alpha in their portfolios.
Right, understood. So when you're here at home, I mean, when we look at healthcare, that seems to always be a defensive play in an area people like more. Is that an area you like too?
It is actually. So healthcare is another area that we own on the domestic side. When you take a look at the dynamics, there's a lot of pent-up demand in healthcare. And I look at healthcare not really being tied to the consumer, because I think you have to be careful with consumer-driven plays like retail. You know, you've seen the retail earnings come in and really show that the consumer is getting weaker, their debt is going up, and healthcare is a defensive place, but there's natural demand there. So you could see the consumer continue to get weaker, yet that
closing these puts on the low
continue
again.
to
It keeps
accelerate from a
testing this
growth and
level.
earnings perspective. And as a
Don't
contrarian,
want
it
to break
hasn't
it
had
yet.
a great year, so potentially has some great entry points here and see some growth there over the next 6 to 12 months.
Or the breakout to the downside, but
Right, understood. And when
can't
you
force
think
it.
about like names like the Magnificent Seven, most sectors are down for this month of August. It's been a tough August. And September is notoriously a weak month as well. Not terrible, but, you know, on the downside, trends to the downside. So are there opportunities on pullbacks that you're waiting for?
There will absolutely be opportunities on pullbacks. Again, I think from a short-term standpoint, you know, if I was a trader, which I'm not, but if I was, I would wait until we get that CPI data in September. Again, if we get an acceleration in September and you see those yields go back up to the highs we had in August, in our opinion, you would see tech come down, and that could be a potential buyable dip for those that are underweight that sector or really want to be bullish in that sector and increase their positioning in technology. So there is a correlation with technology and rates, and I think there's a chance we could see rates accelerate back up because this inflation is going to be sticky, and that's kind of like the double-edged sword with an economy that continues to stay resilient. It causes inflation to accelerate, and the Fed's trying to fight against that. So there's that tug of war there with the Fed trying to get inflation down, but the consumer still spending on credit cards, causing that to stay really sticky. And then, of course, the commodity component that we talked about earlier.
Right, understood. Eddie Gabor, great to see you. Key Advisors Wealth Management. Thank you very much. It's great to see you. Appreciate it. Thanks. All right, coming up next, it's the Big Three. Every day we do the Big Three. 3 stocks, 3 charts, 3 trades. Ben Lichtenstein goes to the technicals. Sarge, Stephen Guilfoyle stops by and he'll tell us all about
Lichtenstein. Error. Those wicks around VWAP on SPY.
So once these firms dig in with NVIDIA equipment, they're going to have a hard time switching out once this equipment becomes cheaper, because he's building such a moat where you almost have to start from scratch if you go to somebody else once those GPUs
see if
become
SPY
available.
breaks out
so
here.
NVIDIA's done a great job. You'll see when you look at the chart that really from last
GME
September on up, it's been almost
breaking to the upside,
not a straight
5.5
line. It's been
almost.
a pretty good diagonal line.
It was right at that
Closer to
resistance.
the upper right. Though there is an
Big
unfilled
break
gap
here.
in the middle 300s, which I'm going to try to ignore as I move forward. Right now, you can see the
It's an
momentum,
area. It's
and
not a hard
NVIDIA
line. I just draw
really,
hard
the
lines.
story is NVIDIA is the only one getting paid, as I just mentioned. My
Market's
target
not
price for this stock is
perfectly timed to us in our
$576.
lines.
The pivot is $480, which was the August high. I add down to the 50-day simple moving average, which is $445, and I panic where I will sell some is if we lose that 50-day line, which is $445.
So at this point, and you had 576 as the target, and
I wonder if
I'll tell you,
institutions
Dan
are
Ives
picking
has
it
been
up or
hot on this
something.
one. He was talking about even a bull case of 600.
Insiders can't buy this
He still
close to
saw
earnings.
upside potential. Ben, what are your thoughts on this?
I have an
stock
interesting
today?
rally into earnings.
Well, you know, Sarge mentioned that we've been moving the ball in the right direction or headed in the right direction. And definitely NVIDIA has taken the ball and run with it, right? In
It was a
many ways.
5%
And Sarge,
dare.
a wise trader, once told me there's nothing wrong with taking profits on the way up. And well, NVIDIA has been, as you can see in the chart, doing just that on the way up, to say the least. A very well-defined trend environment to the upside. You can see we're talking about a bottom left corner all the way up to this top right, recently into a high up around 520. You can see we were down around, what was that, 262 back in the end of April, beginning of May, and here it is again, a very well-defined trend environment along the way up. I went ahead and identified some of the areas of consolidation that you should be looking at, because they're basically a footprint that the market provides as kind of that path along the way
pie,
up.
man.
And
Look at this
I
thing
also
just dance around
noticed here
VWAP.
that just recently,
VWAP
into
chop.
the middle of August, how we broke out
Stop
to the
it.
upside, right, and up into that 520 level. But since you can see, we've been a little bit more overlapping and a bit more rotational in
GNS
this as
down
well,
8.
as you can see, hanging out right around this 480 level.
AMC
So
up
you
5.
can see, as long as we hold up above 440,
Hawaiian
currently
up
balancing
3.
around 480, that working assumption that value continues to form at higher and higher levels
This
continues
is up
to be a
1.
valid one. So let's step away from the hourly candles here.
They
Again,
want the
going
support
back
to
to
hold
the
on
move
Dish.
up we've seen basically through 300 up to that 520 level since May. I want to show you this plays out over the longer term chart here as well. In this instance, we're going back to the beginning of the year around 138. Sarge mentioned he's up 200+% on this stock. It's done very well for the longs. Now, again, breaking out recently, balancing up here
Give me
at this upper
5.3.
level. But take a look at where we are relative to the 50, the 200-day moving
Good relative
average.
strength to
Again,
the SPY right
reflection of
now.
what we've seen in terms of the broader market strength. And this one tied to AI. Obviously, you'd expect to see
I'll
this
shut it down right
reflection
here.
thereof. One thing that has me a little bit concerned is that look at the price activity recently, again up to that 502. I might have said 520 a second
Yeah, the
ago. I meant
VWAP
to say
chop.
502, but I didn't really show or
Profitable again this
exhibit
quarter?
the same
I don't
strength
know.
to the upside, the same enthusiasm. So Sarge might be right on,
What's up,
on
Cesar?
loading some of these on the way up.
Cesar.
Again, just pointing to some of the strength we've seen here on multiple time frames and how we're holding up near highs for the year.
Yeah, and that's the whole thing. I mean, knowing when to take some money off the table, and then, of course, you almost feel like you want to, kick yourself when you see it going higher, but you still made money along the way. All right, let's get to Amazon. This has been one of the Magnificent Seven, a name that has done well. Tell me a little bit about Amazon, Sarge.
All right.
Telling all my
Amazon,
contracts
now,
here.
This is different. I told you I was up hundreds of percents in NVIDIA. Amazon, I'm a Johnny come lately. I'm
I want
only
to
up
just
like
hold
3%
these till
this week.
Valhalla, but
So it means I answered
no
recently.
no
They reported
confirmation that
August 3rd. They
gonna break
crossed
this
top
chop
and
yet.
bottom line expectations. Guidance for the current quarter was for revenue of 138 billion to 143 billion, which pulled the midpoint above
SPY,
the
yeah,
consensus.
or GME, good
Q3
relative strength,
operating income is
5.5%.
expected to post between 5.5 billion and 8.5 billion. They nearly doubled their operating cash flow sequentially last quarter and nearly doubled their operating cash flow year over year as well. Free cash flow has returned to positive territory.
What's up, Cesar?
Debt is starting to come down, and the balance sheet, while certainly nothing to brag about, because I've been harping on their balance sheet for a while, is starting to show improvement. When you go to the charts, you're going to see a tremendous fall from late 2021 down to just about New Year's this year. And then you'll see this trend that took over at the start of the year. The stock has recently, really recently, bounced off its 50-day simple moving average from the upside on 5 different occasions just in August. That gives me that's really the reason what provoked me why I wanted to buy the stock here and now. You'll see relative strength in the MACD are starting to look a little better than they have been. My target price is $165. My pivot is 144, which was the August high. My add is right here because I added it only a couple of dollars below here. And my panic is a failure to hold the 50-day simple moving average, which is currently, I wrote $132, but I think that's wrong. If you could tell me, Ben, what the 50-day simple moving average is, because my chart is slow here.
Yeah, on Amazon, I have it here.
There's the shutdown on
Right
GME.
around 132, Sarge.
Right at that resistance.
Yeah, it is 132. Okay, good. Yeah. All right.
Just in time of SPY to shut down also.
That's my panic.
All right. Got it. Ben?
Well, you know, I was
do you
noticing
know?
the move up that we've seen on the more intraday time frame, the well-defined
SPY.
trend that's been playing
Break it.
out. Sarge,
Break it.
not surprised to hear that you're a little bit late to this one, because as I look at the bigger picture charts as well here, I'm noticing that this one took a little while to invalidate that longer term trend. But let's begin with the short term, more intermediate. I've got a 4-hour candle chart up here, and we're going back to the beginning of May. You can see again areas of consolidation that formed at higher and higher levels. So again, talking about shares of AMZN and this trend to the upside here, simply put, recently up to 143. You can see a bit of a pullback here right to the 131 level, and you might look at this and say, okay, well, these actually 2 tests of that area did take it out. That's not necessarily a line in the sand. It's an area that we look at, again, the middle of the range that we had formed, and in this instance we're talking about throughout most of the month of June into the end of July. So that 131, again, most significant is the limited amount of time
coming to AMC theaters.
At that area, or and again, limited
He's gonna
ability
perform in
to
a
take
theater?
out the key area and get below it with anything significant. So 131 held the way I see it. I wanted to show you what I was talking about in terms of Sarge mentioned he was a little bit late to join in on this one, and I can understand why, because he also was talking about that longer term downtrend. Here you can see that's most apparent on this chart, top left to bottom right. Again, a bit of a reverse head and shoulders pattern forming here in the beginning of this year. See the rally off that lower level, but for me, what I see here is a migration of value to the downside. 123 was significant while we were balancing around 100, coming off those lows for the
What's
year.
the ticker for it again?
Consolidating down here, but see how we took out
these all
123,
changed so
and
much.
this is when, again, I think a lot of the bulls started to get excited about this one again, because it did invalidate that longer-term trend to the downside. So this methodology in terms of identifying these areas of consolidation not only helps us see trend and identify it, but also identify when trend is no longer present, because those areas that were established, the key areas established on the way down, get taken out. Sarge was talking about the 50-day moving average. Here it is, the blue line.
Got a couple transactions
Sarge,
up there
again,
at
right
4
around
cents.
132. We're just off it, off that high, I should say, of 143, and just above that 50-day moving average right now. RSI is kind of limited in terms of anything to get excited about here, but well-defined trend up off those.
The liquid though, can you get filled up there if you're trying to sell?
Right, and so we'll leave it there.
Just one order,
As you said, you've
20,000 shares.
this one a little more recently, Sarge, so you missed the big run, but have opportunity. Last but not least, Cisco Systems that hit a 52-week high just lately. So what are your thoughts there on that name?
All right, Cisco Systems reported on August 17th. I've been in this name a little longer. I'm up about 20% on this one. Chuck Roberts has been doing a spectacular job of transitioning this firm from its hardware past into its future. They beat the street's expectations on both the top and bottom lines this past quarter. Operating cash flows were up 62% to $6 billion. Software revenue up 17%. Software subscription revenue up 20%. Current quarter guidance for revenues of about 14.5 to 14.7 billion, which was what the street expected. But adjusted EPS is looking at $1.02 to $1.04. The street was looking for 99 cents. Full year guidance for adjusted EPS, they have it 401 to 408. The street was down about $4 for that. So they're guiding their margins higher, basically. If you go to the chart, you're going to see that there was a cup and handle pattern that formed last spring from early April into June. And that led to a breakout, which fits, I don't know if you have it on your gadget there, Ben, but it fits my Andrews pitchfork model almost perfectly from the low point in May out into the present. So I believe that if it
just because there was a transaction up there, though, it doesn't mean even if you could buy it or could have bought it, you could have sold up there.
That's my thinking here behind this position right now.
The next transaction is right back down.
My pivot was $52, which is the right side of the cup. My potential second pivot is $60, which is the central trend line of the pitchfork. My add is down to the 21-day EMA, which is $55. My panic would
Why
be
do you
a
think it's
loss
going to
at
get
the
uplisted?
50-day SMA, which is $53. Note that if the second pivot is taken, that would trigger a target change for me from $64 to $69.
I love this. I love all of those caveats and every single point that you're bringing up. Ben?
Well, if you love that, Nicole, you're going to love the chart because it feeds right into what Sarge was talking about in terms of the bullish fundamentals here. And he did point out some key levels that
It's
I'm
not letting go yet.
suggest we
Still
keep an eye on as well. Here, let's dive into
very
the chart.
controlled
First and
this morning.
foremost, I've got a more intermediate time frame here. We're looking at hourly candles going back to the beginning of May. You can see the low in reaction to earnings.
Thought I sold one at
middle
least.
of that month, which was around 45, and then off to the races since. I've got a very well-defined trend here. We're going back to, again, from 45 all the way up to this high around 57. You can see, as I like to identify, and it's clearly defined here, bottom left to top right. It went and showed some of the areas of consolidation.
Look at that. GME is not even.
The market has stopped and paused and kind of regained composure, and we always look for retracement. In this instance, it has been very limited, as you can see. You can
pulled
also
down
see
when
out
it
in a
needs to
vertical
with the
phase out of
SPY.
balance here
Otherwise
right now,
it's
where the market's
chilling.
actually seeking a new area of value at a higher level. So this is just what the bulls wanted to see, right? As we were balancing around this 55 level, they're referencing the 53 level. We don't take it out with any significance. And now we're in that phase that they're looking for. We're seeing higher highs and higher lows. This is high conviction with energy. We're looking for follow through into the end of the week, into next week. And then eventually we're looking for a new area of consolidation to form at a higher level, right? We'll see if we get that, or if we get a V-top and just work our way back into this range here. But either way, this is all very bullish, and so is this. Taking a look at the longer term time frame, this chart, and I just went ahead with a fat crayon, kind of drew some of the areas of consolidation since the beginning of the year. We're talking about
It changed all
49
that, I think, because of us
stands
retail
out.
buying in.
53-ish. It was kind of hard to map this
Once we
out,
learned about
whether
the
it was
zombie
really
stocks,
1 or 2, 51 and 53. But
seller
you
boxing,
can
we
see,
all
again,
started
a very
buying
bullish
these
trend. You can also see the high
dead
conviction
OTC
associated with
stocks.
this vertical move to the upside. Let me just
Caused a
show
bunch
you
of
where we are
volatility.
in terms of bigger picture daily candles here, and
Like,
look at
really
the 50,
shortly
the
thereafter.
200-day moving average. Look at Cisco just
They
taking
locked
off
this
here, a
out.
reflection of what we've seen in terms of the broader market. Optimism associated with
We
strength
put a-
in AI,
put a little
tech
spotlight
in
on there.
general. Nicole, this one is to the
Skeletons
moon
in
here
their
right
closet.
now. If higher here today, we're looking like 5 days in a row to the upside.
All right. Thank you both so much for the big three today. Always so exciting. Appreciate it very, very much. Sarge, Stephen Guilfoyle, Sarge, 986.
GME respecting that
And
resistance.
Liechtenstein, thank you. All right. Coming up next, we're going to spotlight 100flowers.com. Company had its earnings. We'll take a look at the stock. It's on the
This
way
one's been
higher.
kind of a
Chat with the
squeezed one,
company's
actually.
president next.
1-800
Thank you.
flowers. 1-800flowers.com. 12%. Whoa. Gas is bumpy. Good earnings, flowers. Pretty nice trading range on that. $6 to $13. Couple months. This one like squeezing at times. Was. On Valentine's Day, sometimes it's a little squeezy. Wheezy. Me coming back to VWAP. High continues the downtrend. It's to find VWAP as resistance this time. $18 on me. Yeah, I've been looking at DWAP lately too. Oh wow, thing pumped. Dang. I was gonna do some cash secured puts on it, but I'm just kind of confused why it's still a SPAC and what's going on with it. Seems sketchy because of that reason. Oh, it's up 5.7. Nice, Gus. Well done, man. At 1940, seriously, top ticked it? Just like that? Is that because of our chart? Or just... why? You're getting these for earnings, right? Yeah, you... so far you've played it perfect, Guts. Well done, man. You literally got the puts on this first resistance. And I think you probably still hold those, but regardless, it broke through there, and now you got them on the next one. So if you're looking to have a short into earnings, got both the tops. Straight up no line. Nice. Well, glad I could help. I mean, you have until Wednesday, so if it does pull back, if you just got puts, then you should, as long as it holds below that resistance, it's probably going to come back down some before earnings. If you did want to get out before earnings, if you didn't want the exposure, or at least like to make it free or something. Still in the first ones. Yeah, no, I think that was smart. I mean, it didn't have much of a pullback. Just basically just enough to keep rallying. Consolidated. Buy. I think it's gonna run up to 29 before earnings. $10 in the next 3 days. That'd be old GME. 1, 2, 3, 4. Run up here in 4 days. Fight the site. Go SPY, getting close to the low of the day. Still in kind of this controlled area though. It's not broken out even. Down channel's been very controlled. The up channel's been controlled. But actually, see, it's close another one down here. Close one more. I might even up another one on the top. Back up closer to VWAP. Keep playing this little game, SPY. Little game of Pong. Back to VWAP. Still a little green. Down 8.8. Let's see. Up 4%. High 250. Yeah. Not out of the question. maybe even COVID lows. Oh wait. No, I think you're playing it pretty awesome, guys. I think so, like playing it both ways, like you don't have a bias on it, it's great. Trying to have a little short position into earnings, you already have your long position with much more time. IV's, I mean, right now it's higher just for earnings, but overall the IV is so much lower in the last 6 months that tends to kind of be going long on options with it. Does have a big move. Here's VWAP on GME. Liquor's been climbing up, it's up 7%. Hit a higher low here. Good. Looking pretty good. Wish I got those secured puts on block. Kind of a sketchy. It moves just so weird how it moves. Like Trump going to jail or being indicted or whatever happens, like it rips on that. I'm like, what? I don't know when and why it moves anymore. Or why is it even still a SPAC? What is, like, what the heck? What's happening? AMC at 5.5. Okay. GME testing below VWAP now. Coming on down. 2.5%. 2.4. It's a liquidity pump. An IV pumper. Barbecue might be waiting for tomorrow to break out. A choppy, controlled day so far. This is crazy. Watching the SPY. Tick, tick, tick.
Or flexibility to each vendor who uses their technologies creates a little bit more of a value proposition. I think that's also why they've been in high demand last year.
I see. And then you have an example trade for us as well?
Yeah, so I mean, looking at the trend, Nicole, I think the valuation looks compelling. I agree with Citi's call on the name, but I also look at the trends, and the trend is in a nice upward pattern. So what we can do is just play the continuation of the trend. Now, it's not a stock that typically moves in a parabolic capacity, but one could expect the trend can continue going forward. So what we can do is play a moderately bullish trade in October by buying the 190 call, 200 call spread. In other words, buying the 190, selling the 200 calls for October. And altogether, this would cost you about $5 a share, $500 a contract in debit. So the objective is at least to hit 195. That's your break even by October expiration in 50 days, and max profit is $5 a share, is at 200 or higher by expiration. So it's a one-to-one trade. We're spending $500 to potentially make $500 per contract.
All right. Thank you for that. George Sillis, is great to see you every day with our disruptor. Appreciate it. And this one, of course, hitting some new recent 52-week highs, too. Thank you, Arista Networks. Coming up next, our panel is ready to take a look at MongoDB ahead of its earnings. We'll get you all the fundamentals and technical analysis next.
HKD didn't keep going. Hey, pump. Nolan's up 4.5%. Base is down 2.8. If it bounces on this support down here. Laser down 2.8 also. This company is so overvalued, it seems. There's a couple that are like this. Same space. Like EV. Kind of like the EV space, but not actually producing vehicles. Crazy because they're at all-time lows and they still seem so overvalued. Coinbase down 2.5. Gave back some. Aero. Down 2.25. GME, UOP, using VOP as support. Barbecue still barbecuing. AMC came down a little bit, up 3.3 now. Holding these puts. I have one left actually. Happy day. What's up, Izzy B? Oh, HKD again? Bitch. Plays. Gotta give myself more credit. I don't think you do. I don't think you do, Lords. Can't have very big positions with OTC, right? Because it's just too liquid to get in and out of. Not like market ordering those. I even noticed it with barbecue, which is probably one of the more liquid OTC stocks. It's extremely annoying getting in and out of. Huge slippage. Yeah, this chop is crazy. Crazy. I think today will still maybe be some kind of continuation, but just not yet. Somehow become profitable today with this chop. I don't know. I feel like I do better when it moves slower, it's just smaller gains. But if it starts to make it move fast, I could easily flip to red if I'm not careful. Alright, I'm closing my last put there. Oh wait for a setup something. Kind of have a little inverse head and shoulders maybe building down here. Wait for that afternoon trade. Go big, go heavy. We'll get a move today at some point. Be worth our while.
Good afternoon, traders, and welcome to Fast Market here on the Schwab Network. I'm Tom White, and we've got a great lineup for you today, including discussions and option strategies in Broadcom. The chip maker is up over 60% so far this year, into earnings after the bell, and Palantir, which is down sharply after a downgrade from Morgan Stanley this morning. And like Folio, break down consumer sentiment data on Lululemon, which is up modestly today into earnings this afternoon. Now 2.5 hours into the trading day, stocks are modestly higher and extending this week's gains. Traders pored over the U.S. inflation data. The core personal consumption expenditures index increased 0.2% month over month in July and 4.2% year over year, matching estimates. Now let's take a look at the 4 major indices, which are off a session highs, but still all in positive territory. The S&P 500, the benchmark, up nearly 0.2%. The Dow Industrials giving up some of those earlier gains, up about 30
Fat Burger is pretty good. I've only had it like twice, but yeah, it was good.
100 up nearly
I think
0.5%,
that's the place I've had.
and the Russell 2000
Yeah, Fat Burger, yeah.
caps up 0.35% on the session. To help me break down this market
Oh,
action, let's
that's
bring in my
like the
co-host,
actual
Kevin
fast food
Hincks.
one. It's
Kevin,
not like the Chipotle.
you know, this was a big awaited data point,
Wait.
and it was kind of a ho-hum number, some inline estimates, but consumption
Yeah,
pretty,
I've had this.
pretty high.
Yeah, lower personal income and
Pretty
higher
good.
personal consumption.
Yeah.
That's not the greatest scenario in the world. And PCE year-over-year numbers that both were higher, and the market just rolls over the top and keeps going. I thought that was the most interesting part. You know, it was interesting. We got a lot of data from the Eurozone overnight. A lot of their inflation data that came in kind of France's CPI up 1% and spiked from 4.3 to 4.8 year over year. A lot of the Eurozone numbers came in strong. Why is the dollar higher?
Right.
Based on that.
Yeah.
I mean, their numbers were much worse than ours in terms of more inflation. I'm surprised why the dollars, and if it's, okay, maybe based on these numbers, our Fed needs to raise rates again.
Yeah.
Okay, then yields should be higher, and they're not.
They're not. Yeah.
So something is incongruous in the interpretation of the data as I see it and the action of these big things. But tomorrow's a big day, and we're going to get, it's rare that you get 2 inflation numbers like this, wages and income and outlays back to back. I never see them like that one day apart, but we're going to get it. And yet yields are down. The VIX is getting smoked this week.
Right.
And ahead of a non-farm payroll number, that's a little strange.
Yeah.
So there's a lot of, and so let me sum it up in one thing. I think there is very little interest ahead of the long weekend in this market right now.
And volumes have been light all week.
Yes.
VIX settled at 1-month lows yesterday. I mean, there's not a lot of uncertainty out there, or is it just that there's not a lot of participants and there's no depth in the market?
I don't know. Ahead of a long weekend, you could see this market interest die out around 7:35 Chicago time tomorrow morning when this number comes out. If it's not a number that changes some of the tone of the market, tomorrow's going to be a slow day if that happens, even with a payrolls number.
Let's close this market and have a 4-day weekend.
Let's call it like a half day tomorrow. I'm declaring a half day tomorrow.
Well, that could provide some choppy trade as far as depth and liquidity that's out there. So that's one thing to note, because I've seen some of the moves in futures this week where they're jumping 2 or 3 points at a time because I don't think there's a lot of depth in the volumes.
Sometimes with less eyeballs
What's up,
on
Rath?
the market, it takes away some of the volatility, but if it starts to move, there's nothing there to stop it.
Yeah.
We remember the one half day on, was it Christmas
GME
Eve?
broke
A
through
couple
view
years
off the
ago,
downside.
that the market just
2.25
freight
now.
lower and just it got a little ugly that day. So there's always the chance that something could move, but
See 2.8.
I don't see interest tomorrow in this market unless this number changes the tone.
Yeah, and I'm surprised, and maybe I'm not surprised because it's the end of the month. We've had a really good week here for equities.
4 days now higher.
NASDAQ's up nearly 4% so far this week, the NASDAQ 100.
How about the Dow failing here with Salesforce? I thought with Salesforce strong today that the Dow would be the leader, and it's in last place in terms of the 4 major indices up on the day. It's almost unchanged.
Banks down and some of the healthcare in the Dow kind of dragging down.
Still holding all of your barbecue?
CRM. Remember, that's price-weighted
it's going to be
index there, too, also.
Zero or moon
Kevin,
for you, I'm imagining, right?
Our guest today, and that's going to be Nathan Peterson, Director of Derivatives at the Schwab
In
Center
an
for
airplane?
Financial
I don't
Research.
know.
Nathan, we just mentioned
It is 12 o'clock, though, guys.
having a
Thank you
good
for your
week
support
here for
today.
equities,
Thank you for your
light
likes.
volumes on that,
17 on the day.
August is down.
Pretty
We're gonna
slow.
break a 5-month
Pretty slow on the like
win
front,
streak
but
here for the major
it's okay. I
indices.
was late.
Give me your take here on the markets.
Yeah, good morning, guys. So, you look at the charts and it seems like we pretty much got a standard,
Getting close to getting
5%
calls
pullback
here.
in the summer. During the month of August, we're back above the 50 simple moving average on the majors there. That is the composite NASDAQ 100 and the S&P 500. And, I think right here it is a little bit ho-hum because, what is the impetus to get into the market right here, right now? You don't have bullish seasonality. September is, not a friend to the
Let
bulls.
me get some calls there.
You're not making new highs. The 10-year did pull back. I think that was, part of the big push. And, if you look at that big green candle that we had on Tuesday, for whatever reason, it seemed like the market really liked to see that consumer confidence coming below estimates, and also liked to see the JOLTS data that came in below estimates as well. And they translated that to mean that, well, okay, the Fed is done. And let's say the Fed is done. The probabilities are basically 50% or so that we're going to get a 25 basis point hike in November. So the market thinks the Fed is done. Let's say they're done. Let's say yields kind of begin to, they're cooperating in terms of not making a new high. We still have that 19 forward PE. And so I feel like it might be one of these markets where we might just chop a little bit sideways, taking the data, taking the Fed's outlook in the coming months here, and then maybe when we get to November, December,
coming down
then at least you
1867
kind of
up
have an impetus
1.6
in terms
now.
of seasonality to push this another leg higher. But can you guys tell me what's
Fine,
going to
moving
push
up.
this the next leg higher over the next
Break
couple of
VWAP.
weeks or so?
That's true, and historically,
Chop is-
fourth quarter really strong.
Oh, I'm
going
gonna
into
break
the
out of
holiday
it.
Shopping
We'll be on the right side of the
season.
trade
You
when
see
it
people
happens.
Come out there and spend, but you're starting to see savings accounts dwindle a little bit, Kevin. Loans on cars at the highest, I think, $1.5 trillion in loans out there in cars. So
What
there's
the
some
heck?
definite headwinds. You've got coming
Money
up.
is
You've got
means
the
nothing.
restart to people paying off their student loans. I mean, there's might be some headwinds here. I don't know, Cass.
Have cockpits.
Historically, the U.S. consumer has been pretty astute at ignoring all those numbers.
Right.
I mean, fade the U.S. consumer at your own peril.
Right.
Because they always show up. A lot of money in their savings account, no money in their savings account. The U.S. consumer shows up on a pretty consistent basis. So you're right. We always talk about that data, and the weakest part of that data, it doesn't always show up. Could it? Of course it could. But I wouldn't wait for the U.S. consumer to disappoint, because that just doesn't happen very often. I think Nathan's got a point here. This market is in search of the next leg up, the inertia.
Look at these candles
for the
this
next
morning. It's
leg up.
just crazy.
And remember the original script, Nathan and Tom.
Probably
from
not
early
being
in the
calls
year.
or anything right
Sluggish
now.
First half of the year,
Sit on my
really
hands with
good
these
second
tiny
half of the
profits.
year, remember? Well, we flipped the script on that one, and
Right.
we flew for the first half of the year. So now what? How does that change the script?
We're
for
maybe making do another range
And
day.
To Nathan, to your point,
Made our
if
low.
You get
We
that
tested.
valuation on the S&P
Did we come up,
500,
make the high? It's even a tighter
which
range
is
than yesterday, though.
elevated at this point.
Just yesterday we had, like-
historicals, even in this uncertain time at this point. You get the stock market to continue to move higher. You get that wealth effect.
Wild.
You get maybe more people spending, and then you start getting valuations into levels that maybe you don't want to be in, right?
Yeah, I think the
Barber
10-year forward average
coding.
is 16.9 on the PE.
Need a barber
and
breaking
that's
out.
with a average 10-year yield of around 2.3%. So, we're at almost 4.1 here on the 10-year, around 19. And so, again, it's one of those instances where, okay, if I'm going to get into this market, then I want to see earnings growth to come back into the picture. I want to see that reaccelerate. I want to see the Fed on my side, meaning cutting rates.
Still climbing 7%.
Looking to a lot of that cash
Climbing
on the
back up to
sidelines
VWAP.
or cash equivalent, money market bonds, etc., and thinking that, hey, historically that's been
VWAP on SPY.
another powder keg in terms of getting us the next leg higher. But I think the difference with that cash on the sidelines is a lot of times that is spoke to more of a sentiment signal, in the sense that people were, bearish, or they were defensive, or they were trying to hide, and then therefore, when things look to get clear, then that money comes in. But I think the reason it's there is because of the higher yields, which we haven't seen, in 12, 13 years here. So I think, yeah, you're right. I mean, you got to feel that the PE is going to be growing, and those estimates are going to begin to go up, and the Fed is done, and yeah, inflation's cooperating, but it's going to come back to earnings at some point, and it's tough to say, all right, I can get 4% or I can do a 19 PE with the market right here, right now.
5% some places, Nathan.
Maybe through discussing this, Nathan has exposed what might be the stumbling block, and that is valuations of the overall S&P. There's people watching that number, and what that doesn't guarantee the market will go down, but it makes the market more fragile to any hiccup in the data or any news story that could, shake the market. It'll accentuate that because of where we are in terms of valuation.
And to that point, Kev, if you look at some of the earnings that came out, we've got CRM up a couple percent. We've got Okta up, but then you look at Dollar General.
Selling one.
That is a brutal.
This earnings season.
I'm just doing small
from the
positioning.
retail side has been, you better have it or you better have not, because they'll punish you. But then they're rewarding the ones that are doing well. It's really a bifurcated type of retail landscape right now.
Bifurcated?
Listen. That is with what Walmart is doing.
Bifurcate.
After its earnings in its last couple
weeks.
That's
with you guys.
That's alarming at Dollar General.
Divide into two branches or forks.
Those numbers and the guidance that they did
just
for
below
the
Cairo, the river bifurcates.
2023 earnings per share down 22 to 34%.
I'm glad I sold one up there. I sold half.
From last year's quarter, almost by $1, Tom. They missed by 85 cents lower than last year. These are massive numbers lower for Dollar General. So, yeah, Walmart seems to be doing everything right. And like I said it once again, Walmart's ability for a company this size to be lean and agile and move from one
you tell them busy. Go barbecue.
It's impressive for a company that size.
You mentioned Walmart, and there's the.
Look at that chart.
Look at the chart.
And Dollar General doing the opposite.
That rejection on SPY.
All-time highs today, right there, just below 163 a share is all-time high in today's session. Nathan, when you look at the state of the consumer, I think this is a good discussion because it's such an important part of our economy. Makes up, as they call it, 2/3 of the U.S. economy. We've seen that ramp up, and I hate to admit it, the Barbie movie, Taylor Swift concerts. People are paying like thousands of dollars for Taylor Swift concert tickets and going traveling to cities. They said that's like provided a real bump.
My son and his wife went to L.A. for the Taylor Swift concert in L.A.
Holy moly, what's going on here? But Nathan, the consumer is fragile right now, but you still have wages going up right now. The unemployment rate's still at 3.5%. We're going to get that jobs data tomorrow. It's supposed to come in at about 170,000 jobs added. I mean, it seems like we can thread the needle just due to the fact that the economy's still humming along and the consumer's still spending.
Yeah, they're still spending, but are they going to, pick up their spending from this point in time? They might if we go make new highs in the market, that wealth effect that you mentioned, or if housing prices, there's a resurgence there. That can be something that really, gets the consumer to pick up their spending, so we can pick up the EPS estimates. But right here, right now, I'd say the odds are that the consumer is going to be pulling back just because of, we're getting some of those rate hikes that are beginning to really take hold that in the coming months. I mean, it's still a question mark. The consumer has hung in there the whole time, but we have seen kind of a mixed bag on the good side of the demand equation. On the experiences side of the equation, what's interesting to note is that if you look at the the inflationary data on airline tickets over the past 3 months, they're down like 18%. Now, all the earnings reports on the airlines were great, you know, and they killed it, and they said, you know, the demand's there, the consumer is hanging in there, but then the airline tickets are coming down 18%, which is the biggest drawdown in something like over a decade. I'm just wondering if that is an early kind of signal that the consumer maybe will be pulling back some of that money. We know excess savings is going down. We know they are going to the credit cards and taking out all-time debt. But, you know, what are the odds that they pick up their spending or that they pull it back? I'd argue that they're going to be pulling back their spending, if anything, in the coming months.
Here's a quick point on the airlines.
Yeah.
The question is, we knew it couldn't go on forever, right? But the question is, are they starting to trickle in some capacity? Some more seats and more flights and more
United has. They've announced it. Delta a little bit.
In our history of watching the airlines, there is no more bearish volatility factor than adding capacity to airlines, because whether they should or not, that is incredibly bearish for airline stocks.
Well, they should. I mean,
of course they should. They should meet demand, and there should be an equilibrium point. But they turn out to be more profitable when they don't. And we've seen a pullback in a lot of the travel related stocks, including airlines this month. But they say that TSA numbers are still robust. Will that crack, right? Because prices haven't come down. They've come down 18%. As
BFS down another 12%. Wish I could have shorted this thing.
80% higher.
Yes, exactly, from pre-pandemic levels that were low. All right, guys, let's take a quick break here. When we come back, we're going to take a look at Broadcom. Chipmaker reports earnings after the close, up over 60%, as I mentioned before.
Solid rejection on VWAP there.
AI craze. Will they have a blowout earnings like NVIDIA? We'll see. Fast Market's coming right back.
Bifurcated. On this call, hold that thing any longer. Hold them all up there. Getting some puts there. We got him at VWAP, oh well. Get that gap fill now.
But that's what I think everybody's betting on. I've seen price target hikes across the board from some analysts.
Piper Sandler just raised.
Just due to the fact that the exposure to the AI market, right? NVIDIA's little brother here in this space, and it's done really well this year.
Yeah, they raised the price target from $830 to $925. They maintained their overweight. They expect them, in very short, they expect them to beat, and they expect them to raise guidance going forward. So pretty much good news here. Listen, I think this company, their guidance should be around smartphone demand and how they'll play a role in smartphone demand. But, this is a company, the valuation's getting a bit stretched here, but the numbers, their margins are big. They're they're waist deep in semiconductors. It's chips for networking components, broadband, wireless, infrastructure, data centers. I mean, everything that's enormously popular right now with semiconductors, they're in it.
Yeah, and Nathan, to Kevin's point, they're in all these businesses, but we've seen a softness in the smartphone market. We've seen a softness in broadband, wireless a little bit, and AI is kind of taking the load off of some of the downturn and maybe the bottoming cycle in some of those other segments of their business. What's your take here on Broadcom? Can AI rescue it this quarter?
Well, if you look at their last earnings report, it was not in the guidance. It was basically flat revenue growth. And, if I'm looking at the analyst estimates right now, looking for maybe $45 from 41, so that's about 10% EPS. On the revenue side, it's basically going up about 10%, $35.8 billion to $38.1 billion. So you've got to Kevin's point, it's funny, he said it's getting a little stretched because it's getting stretched for Broadcom at a 20 PE. Yeah. I mean, this stock has historically traded at a sub-market multiple. It's been cheap historically. It's grown primarily through acquisitions. And so you've got a stock that has a 20 PE and about a 10% growth rate. That gets you at about a 2-PEG ratio, which is it's about standard. And then to Kevin's point, look at the price target. Piper Sandler goes to $9.25. The stock's at $9.15. Okay, thanks.
Yeah,
so $10,
right.
$10 higher.
Yeah, exactly. Why don't you just make it $9.16 while we're here?
Yeah.
So I think it just speaks to, okay, we got, sound fundamentals and the potential for AI to contribute more. You mentioned up to 25% next year, Tom. So yes, there's the potential for that demand to pull up those estimates. But at this 20 PE, it's like, all right, you're going to have to show me then.
Yeah, and it's not just Piper Sandler. I believe there's a $1,000 price target on it because of this AI and the total addressable market.
And they buy back stock, and they have a 2% dividend yield. So it's not like they're not giving money back to investors.
Right, and that's not common in the tech space. But Nathan, I looked at this implied volatility. It's elevated, right, going into these earnings, right? There's some event risk here. But $38 either way is what the option market's pricing in. That's not much more than a 4% move in the shares at a $915 stock. So maybe it's the rally that's kind of taken some of the edge off of that implied volatility. How do you want to look at this from a trading perspective?
Sure. Yeah. So the technicals are good on it. It's basically trading right around all-time highs. And the IV, it doesn't look that hot. It was a lot hotter last quarter because there was a lot of optimism that, oh my gosh, they're going to pull an NVIDIA. They didn't. But, as an example trade,
I added my puts there.
Acknowledging basically the healthy or the sound fundamentals.
And we're getting a break of the range finally.
Acknowledging that there's
got
potential to get some AI. They're going to talk AI.
Be 450 coming up.
How are they? Is there going to be a surprise there? If you want to do a bullish play, we got to respect the fact that it's a $900 stock here. I was looking at something like a long call calendar, and
probably
I
close
selected the 935 strike price for this, and it was around a 450.
15%
so
at the gap fill.
The thing about this strategy is that.
Hey, Nathan, real quick here. Are you?
Sure.
Is your
closing
strike
15%,
right?
Oh, 945. Excuse me. Yes. Yeah. Thanks for correcting me.
Okay, go ahead.
Thanks for correcting me. Yeah. So now I think the implied move was about $40-ish last I saw. So the thing about this type of a strategy, if you wanted to select a different strike price, if you have a feeling like, okay, I get to slide that strike price wherever I want in the sense of where do I think it's going to close tomorrow, that's how I want to identify the strike price. I can go to the options market, I can add that $40 with the implied move and select that strike prices. I went a little bit below that because it just feels to me after the guidance last quarter that maybe the reaction will be a little bit muted post earnings. We don't know what's going to happen, but if you go with an at the money, for example, long call calendar, it was about $5. So you can select that strike and you're going to get a range of roughly 420 to 540 in terms of any of those strike prices. So it's up to the viewer if they want to select a different strike price than the 945 that I selected for this strategy.
All right, yeah, let's break this example trade down. Just a 1 week wide call calendar to the upside here. September 8th, weekly options, 8 days till expiration. Nathan's buying the 945 strike call, selling the September 1st weekly, same strike, 945 call. So just a 1 week wide call calendar to the upside. Paying roughly about a 420 down. Kevin's what we got here. But your range on this is, I mean, it could be 885 to the downside, 1,015 on the upside. So while Nathan's picking the 945 strike, I mean, this thing's got a nice wide range. Your risk is what you pay, $420 per spread, but you've got a solid range. It might tighten up, maybe 890 on the downside, maybe 1,005 on the upside, but you could still get a nice wide range because of the divergences in implied volatilities.
$900 and change on an underlying like this screams that you should be looking at the option market. Why? Because the 945 call with 1 day to go and $30 above the market is trading just over $8.
GME only up 1% now.
So the theta that you're going to get in 1 day,
1856.
and the opportunity that
Licker's still going 8 1/4
is pretty incredible. And where can you trade a $900 stock? Get
little bounce around
exposure
SPY
for $400
off that gap fill.
right around the $400 level. That's what
I think
options
camera direction,
do,
but
and that divergence
you could just get back into a
between
chop too.
The two implied volatilities, 96
Possible.
to 45.
Yeah.
That's where you can find some definition of edge on this trade. Now, you still got to be right. You still got to get, like Nathan said, you still got to get the right strike price. It could be 945 and it could be 985. But at least you've got theta working in your favor. You've got a relatively low debit on this trade for the amount of price of the underlying. So there's a lot of positives here to this trade. Does that mean you'll make money, Tom? No, it doesn't. but at least, for a baseball analogy, you're swinging at strikes. You're doing it the right way. You're buying a modest implied volatility, selling an incredibly high implied volatility.
Trying to hit singles and doubles.
Yeah.
Don't
Swinging
swing
at
for the
strikes.
fences. But Nathan, when you look at this, Kevin mentioned that
Like
divergence
that.
in implied volatilities. You're buying roughly on aggregate about a 45% implied vol in the September 8th options, selling a 96% in the near-term options. And I like the fact that you mentioned the flexibility in this, right? Because you pick the strike based on whether it's a put or a call, where you think the stock's going to go over the next 8 days, right?
Yeah, absolutely. And it's a strategy, you guys kind of, hinted towards that risk defined, and you don't have to thread the needle here in terms of having, some kind of cushion in case that, the stock doesn't behave like the options market says it's going to. And then the other thing I'd say with a strategy like this, knowing that we're going into a 3-day weekend, one thing you could consider is that, okay, I'm hoping that it gaps up. I'm hoping it's around that 945-ish level. And if so, do I want to carry that long call into next week, knowing that we have a 3-day? Well, that's up to the viewer as well.
Yeah, there's that option if the market's open tomorrow. Liquidity is provided. You close this thing. If it goes up towards at or near 945, gives you that option to close it to expiration tomorrow also. But a good look at a slightly directional bullish trade here, taking advantage of that implied volatility divergence. And thanks to Nathan Peterson, Director of Derivatives at the Schwab Center for Financial Research, for joining us. But coming up after the break, Kevin and I are going to be joined by Landon Swan from Lake Folio for a discussion on Lululemon ahead of their earnings tomorrow. Stock's been consolidating recently, but expectations pretty high for this high-end athleisure retailer.
Now I wait.
consolidating lately. And I think it might be a reflection of some of the earnings that have been coming out. I know this is the high end of athleisure wear, but you look at some of the results from like Dick's Sporting Goods, Foot Locker, Nike's been lagging and struggling. What kind of data are you guys seeing? Because it seems like this thing's kind of starting to tighten up here a little bit. We could have moves either way in this stock.
Yeah, it is. It's. I feel like it's a spring and it's coiling, and it's doing it kind of at highs, right? Like resistance levels, if you will, and that has me a little bit concerned. But the data's pretty strong, actually. I mean, it's not incredible, but it's definitely strong. So when you look at, how well they've been doing against peers, their happiness has traditionally been much higher. But they've recently suffered a dip from, I think, 82 down to 72%. And a lot of it has to do with how they've been handling the shrinkage, right? The theft. And they actually, there's a lot of backlash over firing or disciplining employees who are trying to thwart shoplifters, which, in my mind, you're just opening the doors at that point. But yeah, when people talk about the clothing, the happiness level is very high, but the brand is suffering a little bit from this kind of talk, and it's not something we've normally seen as Lulu lagging behind in happiness. So again, they were about 82 before, so they were right there with Athleta and Viore, but now they're lower, and so there's a little concern with that. And actually, when you look at investor chatter around shoplifting, it's up about 50% on a year-over-year basis. That's investor chatter. So investors are very concerned. They want to hear what's going on. And after we saw what happened with Dick's, of course, that's going to be a question. So they're not immune to this. I think it's going to be a concern on the call. How are they handling it? How bad is it? And what's their plan? The good news is that they do a lot of direct to consumer, right? So they're just shipping right to you. You go onto the website, you buy it. There's no shipping there. And so that's up about 24%. Web visits are up about 24%, which is better than Gap's Athleta, better than Viore, better than Nike, better than all three of these. So very happy with the number of web visits that we're seeing out of them on a year-over-year basis. You can see here the competition is they're all doing fairly well besides Nike, who's kind of lackluster. But Lululemon is leading the pack on web visit increase. And this was part of their it's part of their vision from 2019. They called it the power of three. They wanted to double men's revenue, double digital, and quadruple international. And when we look at how things have gone, their net revenue has been doubled and their net income is up about 45%. And now they're talking about basically doing that again. They're saying, all right, let's do it again. Let's double men's revenue again. Let's double digital. Let's 4X international. They're very aggressive in their goals, and they've shown the ability to really execute with high quality products. So long term, love this company. Short term, the only concerns that I really have are about the theft and the
coming down,
and then
0.71% up now.
Nice run this week.
It's red.
Not nearly as large as the expected moves. So it's not, it's not all priced in, but
did it trap you?
Investors are definitely expecting a lot out of this one. So it's on the higher end, on the price you're in going into earnings. So those things give me a little pause. But if it were to sell off, I would be a long-term buyer, at 360 for sure.
Yeah, Landon, 42% of their total sales now are online, but 65%.
12:30, still a ton of day left.
Yeah,
to make a big move.
Landon, how does Likefolio plan to when you look at a company like this? Because Asia, how about this? China's sales up 80% in the last quarter. They grew 80%. Europe is a big part
Closing
of their
one more
growth.
put there.
Places other than the U.S. is a big part of that.
That big movement to the upside, I don't know.
That you guys talked about. How should we look at that? Likefolio focuses, I know, on the U.S., but what should we do? How should we proceed if we think the real numbers here are going to be abroad, right? We know digital. We know what the U.S. is doing. What do we do here? How do we navigate this to know if what they're planning to do overseas is working?
Sure. So, the U.S. is the focus for our social data, where people are talking online about what they like. But when it comes to web data, it's global. So that web data that I'm telling you about, that plus 24% year over year, that's a global number. So we can lean on that pretty strong and just see what mentions are looking like in the U.S. and try to translate that through that web data. But overall, it looks very strong. Now, again, that direct to consumer is only a portion,
only
like
up
you
half
said,
a percent
30%
now.
or so. It's only a portion of their total
BBBYQ
sales.
still
But I think it
BBBYing.
does give you insight into the rest of it, right? If you like Lulu and you go to the store a lot, you're going to end up buying online or vice versa. So the fact that it's up 24% year over year
GNS down
and it's
8.8.
leading all of its competitors tells me that things are looking pretty good for the company. But this chart right here is what kind of bothers me, right? I mean, it has run up to this level over and over and over again, and now we're running up to it right before earnings. That gives me a little bit of pause at this level. I mean, if this stock was trading at 360, I'm saying let's go. This is a great bullish trade.
One there.
At 380, 385, I'm just a little bit hesitant, and I'm almost hoping it sells.
Very
off so
tight
we pick
ranges
up some
today on
shares
SPY.
tomorrow.
So,
but if
so far
on the earnings play itself, the score is plus 22, barely in that bullish category. That takes into account where the stock is at. So we're still comfortable betting to the upside, but it's I'd love to hear your guys' thoughts on investor expectations with the stock running up to these levels where it just has had so much trouble in the past.
Yeah, they're expecting about a plus or minus $22 move or $26 move in the shares post earnings. But Landon, we've seen it in the retail earnings. We talked about it earlier on the show. The divergence that we're seeing between the winners and losers in this space, is it the high end that's getting rewarded because it's more of a resilient consumer according to your data, or is it just maybe execution issues on some of these? Dollar General getting hammered today. We mentioned Dick's, Foot Locker. Those two stocks have been hammered since earnings, but then we see Abercrombie and Fitch doing really well, hitting highs.
Yeah, you know what? I think it's a little bit of both. I mean, I think execution is the more important thing, and you've seen that. You can see companies that, for example, a year ago or so, when we looked at Dollar Tree, Dollar General versus the newcomer Five Below. Five Below executed better. They did better, even though they had the same customer, basically. So I think that it's definitely nicer to have a more affluent customer who's more resilient to inflation and concerns like that. But when it comes down to it, the execution at the company level is what makes or breaks a company. We're actually seeing that across all of the industries. We are seeing the sort of the winners and losers branch out and spread that, increase the distance between them and their peers because of mostly in use of technology and just execution overall. But technology is really big, and we're seeing that grow more and more and as a separator between winners and losers. So I say look at the company. How have they done over the last 2 or 3 years? We talked about that power of three strategy that they executed very well. They're trying to do it again. I like to bet on people, and the people at Lulu have done a fantastic job.
Yeah, good quality, and that's what they're known for. We'll see. Big move expected in this one. All right, great data. Thanks, Landon. Have a great day.
Take care. Thank you.
That's Landon Swan, co-founder at Likefolio, breaking down the data. And Kevin, we didn't even mention the moves over the past 3 quarters post earnings. They've been like just all over, mostly higher the last 2, lower the one before that.
Nike, Lululemon, Tom, once you know your size, it makes digital so much easier.
You don't have to go into stores.
No, you don't.
I don't go into stores for my own stuff.
Right. And so once a woman shopper or a man shopper in this case knows what size they wear with Lululemon, that's probably why you're seeing these are all repeat customers that don't feel the need to go in the store anymore, and that's probably just a almost regenerating order every couple months.
Yeah, if they're so comfortable and they're changing the styles. And it's such a fickle business, the retail side of the business, like what's in, what's not in. This is one of those stores.
Always in.
It's a brand that's always been pretty popular. Now, Kev, going into earnings, I mentioned the big anticipated market maker move. I believe it's about 7.5%. Either way, they're expecting. How do you want to look at this one?
Yeah, this is one of those where you look at the divergence between the two, much like Nathan's trade, except historically I like to have a chance on both sides, right? We can make a case where Lululemon's run up to this level, and it usually backs off when it gets up here.
Yeah, it has the last 2 months.
That said, if you look at the 3-year chart, it's been $100 higher too. so you've got a big thing for me this quarter has been look at the 1-year chart, then look at the 3-year chart.
Right.
It usually tells two different stories. So what I did, Tom, I looked at not just the calendar, but the double calendar. On the downside, I did the 410, 1 week, keeping it 1 week. You can expand it longer if you want to do that longer, but the 1 week, the 410 call, the 350 put. So with an expected move right around $27, that gets you to 54. I went 60 in if you combine the two directions, Tom. If you're doing both of these, you're in for right around $2. The prices are moving a little bit between the two, but it's trading real close to $2 if you do both sides. It's right now, it's like $1.15 and 85 on the call side.
It's about $2 right now.
So it's right around $2.
Yep. Let's break this example trade down. In the September 8th weekly series, so just like Nathan's call calendar that we talked about in AVGO, this is actually two calendars. We're using one on the call side and the upside, the 410 call buying the September 8th weekly, 410 call selling the September 1st weekly 410 call, and then on the put side, doing a 350 using those same option series, paying a $2 debit. There's your risk, $200 per spread. But you can see here from the risk profile, you still have a wide range of just below 320 on the downside and above 460 on the upside to potentially be profitable on this type of strategy. You don't want the stock to kind of settle in where it is right now around that
GNS still, Julian?
390 level. You want it to move about that one standard.
Yeah, you should be getting
maybe a little bit more
information on your
giving yourself a nice wide range for
dividend
this thing to become profitable. Time decay positive because your options that you sold in the
I didn't like this RSI divergence that formed the other day.
Decay at a faster pace than the options that you're long on this one also. But this is taking
confirmed
advantage
on
of
this day,
divergence in
8/29,
volatilities between the two
which was
option series.
Tuesday.
But then also taking advantage of time decay also. So good look at a double calendar here. Expecting to move, but not having to pick a direction.
But we've had a pretty big pullback from there, so maybe it's still a nice trend.
Quick break. When we come back, we're going to talk about.
You kind of see a support being built here,
The
potentially.
data analytics firm is down sharply after a downgrade out of Morgan Stanley. This one's been doing really well so far this year, up over 100%, but getting hit today.
Buys come down more here.
Some bad analyst news. Fast Markets coming right back.
Adding to those puts. Drop in there. You registered your shares? No, it could be, Julian. It could, squeezy one. It seems like once the dividend's done, I don't see any large naked short position. Could still be shorts in it, but that was kind of the point of the divvy, to force him to close. So yeah. Oh, SPY's coming down a bit. Glad I added. Closing one there. Guess that's what, 25%. close to 25%. Still want 450, but I don't know. Spy, let it out. Oh, breather. Now we're getting to that right shoulder area. 1247.
Today, Citibank basically downgraded to underweight from equal weight, and they've got now basically a price target at $9. And I think the reason being is if you think about artificial intelligence, predictive analytics, data intelligence, if you will, that's essentially the roots of Palantir, and the roots also
Day's going good,
really
Julian. Thanks.
founded in the military. The Department of Defense was a major customer, which actually helped
Was able
the
to
foundations of Palantir.
trade through this
But
drop
the
without
challenges for
going red
Palantir is breaching
and get on the right
the
side of
private
this drop.
sector. They have been moving more so into the private
Didn't get
sector
trapped in
realm of
GME
the
today
equation, but the challenge also from that standpoint is
either,
think about the competition
and was able to
now,
help out Guts with his puts
when
entry
it comes down to commercial and enterprise level
at
based customers. Now, if you look at the
1940. He said he got
report
puts.
last quarter, which was published on the 7th of August,
All
sales
good
only grew
things.
about 13%. The total customer
We're
count
flushing there
on
on
the
the
commercial
SPY.
side,
Didn't really have a
private
chance to
sector outside
reload.
of course,
Just
the
holding what I
Department of
got for
Defense
now.
business they have, grew about 30%. So one would say perhaps that despite the number of customer count increase for Palantir, they may have had to make some concessions to keep existing customers in the private sector on board with their software. So I think this is an interesting situation where we're seeing a divergence of the
so bad.
better playing, if you will, valuation AI-based stocks. I'm going to put NVIDIA out there. Maybe Aristonet is another one that's actually hitting new 52-week highs versus Palantir, because if you look at the projections last year, they were expecting 30% compound annual growth rates in sales by 2025 or through 2025. Obviously, they missed that last quarter. If you look at the earnings profile for Palantir, they're expecting about 23 cents a share.
GME about to go red
for this year, but 2024 is not very meaningful at 26 cents. That's about 12% growth. But the kicker is it's trading around 73 times forward earnings. And so that's about 5 times EBITDA. It's expensive. And I think that's one of the reasons why Citi is downgrading the stock. And I also think one of the other reasons why is there's a lot of competition now at the private sector level, and that's what I think is challenging Palantir.
You know, George, I'm going to read you a quote from the Citigroup note on Palantir.
Morgan Stanley.
Sorry.
Morgan Stanley
yes,
downgraded.
I thought it was. And it's going to be nightmare fuel for people that are long AI stocks, and that is this. Looking for a tangible revenue contribution from generative AI, and the fact that Palantir had the lack of a monetization strategy. So therefore, George, these people, there's so much excitement about AI, but these people got to find out how to make money from it. And when they do, there's going to be winners, George, and there's going to be losers.
Absolutely. I think we're seeing that divergence happening. I mean, it comes down to tangible income. And I think that's where you're going to start to see the divergence away from the competition. In other words, there's a lot of competition out there for the private sector AI. I mean, just think about Google and Microsoft altogether are very competitive in this space. Salesforce also is very competitive in the artificial intelligence area from an ERP or enterprise resource planning software standpoint, or even CRM or customer relations management software standpoint. That's really where Palantir's growth estimates came from. It was the private sector. Now their core business, their core government business, their public sector business is still robust. That's helping keep their business operating. But I think you're just going to see now a valuation divergence. You know, very expensive AI stocks that have no tangible, haven't proven themselves from a tangible standpoint to make profits from it. Yet, I think Palantir fits in that same space, along with C3 AI, by the way, which is symbol AI, versus, you know, companies that are tangibly making profits from AI. And that's, again, some of the hardware companies like Aristanet and, of course, NVIDIA.
Yeah, I think some of the inline results have said you got to be patient on a stock like this moving forward as they continue to monetize. All right, thanks to George Tillis joining us, breaking down Palantir. So, Kev, you know, the stock's up still over 29% so far this year. So it's had a good run, but it seems like this 14 level has become an area of support. So I looked at this from that aspect. Yeah, you're getting the pullback. How do you take advantage of it if you think the stock's going to rebound here? So the strategy that I looked at is a combo trade, sometimes referred to as a risk reversal. Or I'm going to go out in duration, though, Kev, on this one. Give myself some time. Give myself some patience, right? So I looked at out in the November monthly cycle, so 78 days till expiration on this one. I'm going to buy an out-of-the-money call, the 17-strike call. That's bullish, right? But you're paying option premium, extrinsic value on that call because it's out of the money, right? You needed to go through 17 plus whatever you paid for it. So to help finance that, I looked at selling a cash secured put. That's right at that recent support level that we've seen over the last 2.5 months, and that's the 14-strike put in November. Sell that one. So you're buying the 17 call, selling the 14 put. You're collecting a credit of 20 cents. So what does that mean? Well, I can make 20 bucks between 14 and 17, but anything above 17 is profitability also. But it takes my break even down to 13.80 on this one, Kevin, on this. But now, you've got a lot of risk on this, right? Down to zero. If the stock were to somehow go to zero, you got about 1,380 bucks in risk per spread on this one. But Kevin, it isn't a stock replacement strategy, but it's definitely taking a bullish call and a neutral to bullish put for upside potential over the next 2.5 months.
Yeah, you're long a call, short a put, which is basically a synthetic, but they're not the same strike. If they were the same strike, it'd be 100 deltas. This one is about 75 deltas. And you're doing it for a credit, which gives you that buffer zone where if nothing happens, you don't lose money. So if it stays between 14 and 17, you make the credit. Anything over 17 or probably 16.70 with if it trades close to 30 cents, you know, from then on it's infinite. Profitability, and stock's been higher than that in the past.
Oh, it's been about $40. But you've got to be comfortable owning the shares. If it's below 14, you still have that short put over into November expiration. Got to keep that in mind also on this type of trade. You got to be comfortable owning those shares, but it gives you that window to the downside before you start getting hurt on that, but taking advantage of upside above 17. All right, Kev, that's going to do it for you and I today here on Fast Market. But stick around right here on the Schwab Network. Next Gen Investing is coming up.
of a bouncy bounce there on SPY. Might be re-adding to my puts. Adding some puts there. A pretty tight stop on the rest of this position though. My other ones just got stopped out on whoops. Crazy. Up, psych you up. Indorbal. Indorbal. Crazy, that was a big enough move to stop those puts out.
I want to get your thoughts though. We got the market of yesteryear back here. We got the NASDAQ 100 out in front seemingly every single day. And if you were an investor, particularly a next generation investor, we kind of think of them as going for sort of what they know and what's new. A lot of times that's NASDAQ 100 stocks. That's the mega cap tech names. These are the important ones from a math standpoint.
And a lot of times that's tied directly to what we're seeing in rates as of recent, where rates to the upside have been a bit of a headwind for some of those big tech names. So to see the 30-year down around 1% today, I'm not surprised to see the NASDAQ leading to the upside.
Yeah, good stuff. Looking forward to tomorrow, of course, jobs data. But we're going to set all that stuff aside. We're going to talk what's on the shows. We've got a fun one planned. Of course, we kick everything off with upvote, downvote, a couple post-earnings looks, but mostly just analyst reactions to a variety of names. Looking forward to going through those in just a moment. Then, of course, for fear of missing out, one of the big names in earnings that we just heard from in Salesforce, so excited to go through that. We'll preview Lulu later on in the show, and then we're going to recap Chewy with George Tillis. It's a stock that we've talked about a lot lately on here on this show.
I'll line you guys up somehow.
A company that
we're getting it one day at a time.
From a service standpoint, but the stock itself has been pretty lackluster and languishing as of late. So we'll have George go through those numbers with us, maybe try to explain why a company that is so beloved can do so poorly from a stock trading standpoint, and why those two things don't always align. But upvote, downvote, not always never endorsements, never recommendations here, Ben. But we got some good ones and some names that we've talked about a lot over the years. First one is Shopify. This one is not a post-earnings reaction, but rather an analyst call after speaking with the team. So kind of like a pseudo-investor update, I would say, as the team at Canaccord met with the team at Shopify, met with the CFO as well as the head of IR. And they left. I talked about this story earlier today. They left feeling that this is no longer a hold, but rather a buy. They talked about while the valuation is getting a little bit rich, they feel like it's deserved. They think this is a secular growth story in e-commerce. They think that Shopify is the standard when it comes to small and medium-sized businesses and merchants. And they think that the point of sale side of things and the B2B side of things can be a driver of growth going forward in terms of gross merchandise volume. So an upgrade to buy from hold, price target up $10 as well from 60 to 70, Ben. Some optimistic sentiment from Canaccord regarding Shopify.
Alex, it looks to me like investors think the analysts are right about this one, as we're currently trading up on the day by about $5. You're talking about an 8% gain at $65.25. This is a stock that bottomed out around $51.52. It's been higher since. Today, too, again, around that $65 level. I did notice that we're still shy of that August high from earlier this month. It was up around $67.68, the next hurdle for the bulls. Recovering nicely, though, considering the selling we saw after earnings a few weeks ago. The move lower I just mentioned was to $51.52. It filled a gap that we saw from May when shares spiked up and through $50. The May gap was from earnings, so you'd hope to see a little bit of follow through associated with that, but the stock has done well for the bulls this year. It started out the year around 35. The move today has us back above the 50-day moving average, and up around 90% year to date.
Those ones you open today?
Not all analyst moves are the same, right? Sometimes you get an analyst who just makes a call out of nowhere. Sometimes it's post-earnings, sometimes it's pre-earnings. But I like these type of analyst updates where they went in and actually talked to the company, saw some things, and came away with the message. Now, granted, the company's going to put their best foot forward, I'm sure. But at least we got a real reason, something tangible here behind this change in sentiment. I think that's why the street reacting so positively here today to this story being basically the primary story driving the action. Next one on the list, though, is an earnings update in the cybersecurity space. We're talking CrowdStrike, Ben. Higher after earnings, in which they beat on EPS by 18 cents, and they beat on revenue by about $7 million. So modest in terms of a revenue beat. I would say a little bit more impressive on the earnings front in terms of the beat. But really the story to me is the analysts love this. You see raises of price targets from Stifel. You see raising price targets from JP Morgan. Post these results, all things considered, seems that this is spurring some optimism because I see a stock up almost 9%.
Yeah, analysts not just loving this one, investors and traders also. A big gain here today. We're talking up $13 to 162, well, right around 162.50. A big move up really from 142 earlier this week. Again,
that's sick. 37% on a daily with GME options is
high for the stock,
quite
but
a
still
bit.
Shy of last month's high up around 167. The move up has us back to the
top
of the range that we've been in since May, with the lower extreme of that range being around 140. Again, you can see on the chart here the rally into the upper extreme of that range. It's right around 160 to 167. Now, it's a third test of this upper extreme and a steady trend higher off the year low print. You started out the year around 93, up above the 50, above the 200-day moving average. This is the kind of energy the bulls are looking for into the beginning of September. Alex, take out that July high I mentioned earlier. You're back to levels we haven't seen since October of 2022.
A lot of stocks, particularly those in the tech world, really, really nice 2023s. What a difference a year can make. 2022 so devastating for that part of the market. Not the same this year. But next one is kind of tangential to it. I wouldn't say that they're the same type of company, but they sort of operate in that same space, and that's Okta. Another company, this is post-earnings. Impressive results, some analysts love, leading to a pretty big move, up almost 13% here in real time.
Close another one.
Beating by 10 cents, 31 cents on the EPS. Revenue beating by 21 million on a $556 million print. So I would say better beats on both sides, given the percentages relative to the numbers. Evercore ISI upgrading the stock to inline from underperform, 75, 65. To me, that says this is a stock that some people maybe were caught off sides in, maybe didn't see this optimistic of numbers and adjusting as a result. Wells Fargo, though, has been overweight this stock, and they hiked their price target as well to 95 from 85, Ben. So maybe a little bit of more happy campers, let's say, in that analyst world over at Wells Fargo than today at Evercore, but both of them acknowledging the strong results from Okta.
Yeah, the longs are happy campers here today as well, Alex. We're talking up double digits dollar-wise, definitely percentage-wise, or near a $10 gain here today. Taking a look at Okta, spiked up in reaction to earnings this week from the lows we saw into the end of last week. That was down around 70, back up again to, well, 86.50 this week, to back to the end of May level. The May high for the year was up around 91.50, so still about $10 off that high, but convincing move up into the end of the month, and exactly what the bulls are looking for as we kick off the month of September here. And I did notice shares of Okta spent weeks in a very narrow range. If you remember from the beginning of June, they were right around a $10 range, 68 to 78, until we took out that May high, or until we do, I should say. Keep in mind, we're still relatively contained this year from 65 again to 91, but this is a stock that's also above the 50-day moving average and a representation of what we talked about at the top of the show in terms of strength in the NASDAQ and tech in general.
Another name that we talked about earlier on Morning Trade Live was Arista Networks, Ben, and this is another name that got an upgrade from Citi, and this is sort of more in that line of this is the analyst making an assessment. And so you don't see quite as strong of a reaction, but you still see a pretty robust reaction, up about 4% here intraday. This analyst, I thought, made some interesting points. First off, they do upgrade to buy from neutral. Price target is 220, up from 177. So pretty, aggressive adjustments there. But they talk about this is a word we've seen a lot when it comes to AI and cloud lately, which is hyperscaler. Really what they mean is the biggest companies in the world, the ones that are boosting their arsenals to compete in this AI arms race, are the ones that are going to spend the most money. It's natural. Hyperscaling. They're going at rapid speed. You want to be exposed to them. And so as hyperscaler spending on traditional data center infrastructure rebounds and a top customer's CapEx recovers, that's going to be beneficial for Arista Networks. That's one thought. They also talk about traditional just kind of networking and Ethernet. And they talked about one of their competitors, InfiniBand, really winning what they called round one. But peers in the industry alongside Arista really feel good about the next couple years bouncing back there. So Citi increasing 2024-2025 earnings estimates, leading them to feel that this can be some upside from here in this stock. And also a November Investor Day on the calendar, they feel can be a positive catalyst, a positive update for ANET going forward.
Yeah, Alex, Citi's on to something here. This is a stock that has been on a tear this year. I just saw the lower third up 55% year to date. A well-defined trend to the upside. If you remember, end of July, beginning of August, we were down around 150 up to 199 after earnings. The move up this month, in continuation of the move this year from January, we were just below 110 again to just shy of 200. So a significant move to the upside, almost 100% gain. Taking a look here at, well, in 2015, this stock was trading below $20. It's more than quadrupled since the pandemic. Again, above the 50-day since the end of May. Aside from a couple brief visits below that closely watched moving average, we've been holding above it pretty consistently. A very bullish pattern playing out here, to say the least.
No doubt. And there's really no wrong answer to any of these names. There's no right answer either. We could have narrowed this down any way possible, but we talked on the Chartmaster on Morning Trade Live. We looked at Shopify as well as Arista Network. So for the sake of keeping it a little bit fresh, but also a little bit of a theme in the security world, the internet cybersecurity world, we're going to be looking at CrowdStrike as well as Okta a little bit deeper with the Chartmaster Rick Ducat in the next segment. Ben sticking around. We'll be right back.
Big bounce there on SPY. And GME almost red. AMC down 0.5%. Got Corsair up, COS is up. Strange ones. Bounce on Corsair. Double bottom there on COS. Look at that. Looky, looky, looky. Wow, Rum's had quite a bounce. Look at that thing. GME's almost red. GME's break even.
So back further there, over closer to you, Ben, that's kind of the resistance zone to be keeping an eye on. So we're kind of in the middle of that today here. So it'll be interesting to see where things wind up with the close. We're up almost 9% on the day. So it's been a big day for this stock.
Speaking of in the middle of that, I'm noticing here that we're kind of right in the middle of this channel after a test here again of that 138 level, the lower extreme of the channel held. Seeing some energy associated with this. It does look like RSI is exhibiting some enthusiasm to the upside. So Rick, if we were to take out 165, I'd imagine the next big hurdle for the bulls would be the upper extreme of that channel.
That would be a big one, yeah. To me, this stood out as well. This little volume node near about 172, that could be a potential bump in the road on the journey up to the top of that channel there. So look out for that area and look out, as you said, for the top of the channel. Probably around 175 or so.
I guess then the other way of looking at it is if we were to roll over off this level and fail to get above that bump in the road, as you put it, maybe a bit of a head and shoulders pattern playing out, and maybe what the bears are looking for, possibly just work our way back into the lower extreme of this range, back down to maybe 140.
Possibly. I think one potential stopping point would be where the gap opened up here.
Makes
right
sense.
Around maybe 154 or so, probably around that point. let's see. Yeah, 154. That's about right where we opened up today.
Considering the energy that we're seeing associated with today's open and the run-up, if we were to pull back, I think that'd be a key area to watch. Thanks to Rick for the look at crowd, but I want to talk to Alex in terms of how to trade this one and how to get ahead of some of what we're seeing in terms of the price activity and shares of CRWD. Alex.
Big bounce here. Like I said, end of the day, we could have be a rally.
Running nicely. It's basically near its intraday highs. It gapped up higher. It's getting close to the top end of its recent price activity as well. So while that channel is upward sloping, there's some reason to believe that if it is to break out of this level, maybe it tests back to where it was, let's call it 52 weeks ago, upwards in those mid 180s. And that's what we looked at here. Giving this one a little bit of time, but buying a call calendar above the market around 185. So the beauty of this is super customizable. You got a different price target in mind, be it bearish, bullish, neutral. You can adjust this one given the strike availability in crowd. But what we did in particular here was we went out to the
HKD
October
and
cycle,
Rockets.
and we anchored the trade there by buying the 185
HKD was down last
call
I checked.
in
They're ripping.
In order to reduce that debit,
down
we
4%.
sell the September 29th, in this case, 185 call. So same strike. When you do that, you get this type of a risk profile.
That goes down the path to filling that gap down there.
Right to the strike. That's 185 right there, the apex of that profitability graph. We do have two kind of estimated break evens here on the screen. Give this a little bit of kind of some benefit of the doubt kind of a thing. It's not exact when it comes to calendar spreads. This is the time spread. These are two different expirations we're talking about. This is a theoretical estimation of where this could potentially be breaking even on that September expiration. But what you should know is this one is most likely to succeed the closer it gets to 185. And because 185 is a lot higher than where we're currently at, it's a bullish strategy. It needs some movement to the upside. And if you get it, maybe you see this one perform nicely. Most importantly, though, $1.50 debit means $150 in risk. That's your max loss. That's your total risk on this trade when looking at it, Ben.
Okay, so we're targeting the 180 level with, again, the break evens pretty well defined here. Let's bring Rick back in because we've got another stock I want to dive a little bit deeper into and get his thoughts on in terms of the technicals. Rick, we were talking Okta earlier, some of the fundamentals, why it's on our radar here today. I wanted to get your thoughts on the technicals because in a very similar pattern in many ways, right? Contained, relatively range bound, but seeing a nice move up in reaction to earnings today.
The story with this chart really begins with earnings about a year ago here. We had a 33%
GME didn't go red. It went all at break even.
And we never really recovered all the way from that point. We did hit some yearly lows near 44. We've been trending, you could argue we've been trending upwards since then, but like you said, kind of a little more sideways in the near term. But we made it all the way back up to that level where we had our gap, the $91 level roughly. We filled the gap, and then we had another earnings event and just tanked. So kind of earnings are definitely something to watch out for in this name. But we can see as well that since we had this last earnings event in May, we kind of have topped out near the 76 level, this green dashed line here. Today, though, we're having a nice big breakout here. We're crossing above all three of our exponential moving averages that we follow. And we were, keeping an eye on this one as the day went on. We were stopped right at that purple 252-day EMA, but we are making our way above it now. It happened to line up pretty closely with our old trend line as well, this blue dashed line going across the lows that was violated. But it can be useful to keep these lines on your chart anyway because they can come back into play if price reaches them again. Old support becomes new resistance and vice versa. $86 level, this red dashed line, that's about where we topped out here and here and here. And we can see that that was roughly where we topped out once again today. So that's a line in the sand to beat to the upside. And then beyond that, we've got to fill that gap area once again near 91. To the downside, like I said, the $76 level, that was a point where we topped out several times in the past there. We can see that we topped out there and roughly there as well. So once again, old resistance becomes new support. So that's one mark to watch as well. RSI, measure of momentum here, crossed into the overbought area. So that's typically regarded as a sign of strength. Couple that with a break above resistance. That's painting an encouraging picture for the bulls going forward.
Yeah, the only thing that really I see in terms of technicals here that could be a little discouraging for the bulls, again, a similar scenario in terms of what we were talking about with crowd. If we were to get a right shoulder playing out here, ultimately you have a bit of a head and shoulders pattern. If we were to start to see weakness here, breaking out, I'd imagine there, what do you call the neckline line at that point, it would be around that, well, maybe 75 down to the $70 level.
Perhaps, yeah. And we can see as well a bit of a volume node forming here around the $83 mark. So that could be an area where you see a little consolidation. You can see that was kind of where price bounced around a bit in the past as well. So look for a migration either above or below that area. Could be down back here near 76. There's another node there.
That volume node Rick just pointed to kind of reminds me of the bump in the road he was talking about in terms of CrowdStrike. So again, possibly a strength here right now, but the bulls really want to see some follow through associated with this. They don't want to see this one stalling out. Thanks to Rick Cat, the chart master, for helping us take a look at a couple names that are on our radar here today and a couple charts here. Let's bring in Alex again in terms of talking about the trade here. How do you approach some of the opportunity that this one's presenting in terms of the range bound trade, but also as we're looking a little bit further out?
What I took away from that is we're at a pretty critical level. We're right up against that former trend line. We're right up against some pretty significant levels as well as that 252-day EMA. And so to me, obviously this is on fundamental update. This is on earnings. Maybe we see a breakout. Maybe we see a rejection. But with kind of the optimistic mood today, I looked at the bullish version of this. But what I wanted to look at was something that'll benefit from the breakout. But it's risk defined the event that we are rejected at this level. So something that is somewhat straightforward and relatively tight in terms of its range of profit and loss outcomes, so that if it does break out and it does test some of those former levels, it can be profitable. And so what we're looking at in particular here, Ben, is going out to October, giving this one a little bit of time, buying the 80 call, selling the 85. So we're creating a $5 wide window where a variety of outcomes happen, but anything above 85, anything below 80, that's max loss and max gain. And so what we're looking at in particular is a break even, if it's done for 250, of 82.50. That's essentially where we're at right now. No, a little bit higher than that, but within the realm of basically where we're currently trading, especially given the volatility intraday. Anything above 85, that's max profit. That's 250, not accounting for fees. This thing would go through assignment and exercise, more than likely offset for the max value, which is the best case scenario for a trader or investor deploying this strategy. Where's the risk? Well, the risk is it's rejected, it's technicals, whatever it may be. Stock goes down, it's below 80. But you know the risk going in. It's the debit spent. So in this case, it's a 250 debit, it's a 250 max loss. So not an overly complicated strategy, Ben, but one that I think, especially if you're subscribing to some of those technicals that you guys were going through, you get that breakout. I'm not going to say sky's the limit, but maybe more than $1.30 is in the cards, which would be essentially, $2 would essentially be max profit. And then, of course, the risk taking place below $3. If it gets rejected, you talked about a head and shoulders pattern. Maybe you're seeing a significant downside move. Well, you're only exposed here for 250 as opposed to, if you're a stock shareholder all the way down to zero.
Yeah, I like this because when I look at a range like this, Alex, especially a really well-defined, mature range with energy up and through the middle after a retest of the lower extreme, it tends to offer itself up for a retest of that upper extreme, just kind of supportive of that chop horizontal type pattern that's been playing. And
breaking this shoulder here, this inverse head and shoulders.
Those lower extremes get honored, and if we do see some energy, ultimately it would take advantage of that breakout to the upside.
Well said. Most importantly, too, just one way to look at it. You got a different opinion. You want to adjust that based to better reflect your opinion, be it on a CrowdStrike, be it on an Okta, or any name. You can do that using options. There's plenty of flexibility and customization. That's going to do it for this segment. Thanks to Rick Ducat. Thanks to Ben. He'll be sticking around. Coming up next is FOMO. We're going to be talking some Salesforce post earnings, making a nice move to the upside as well. We'll be right back.
AMC, not that abnormal really. If you look at the range, it's making it's large from its highs, consolidating, and higher highs, higher lows. Looking good still. Way up. GNS down 10.5. Liquor's up 10.5 now. 5 minute to VWAP. Looking for a move back to the highs at least. We gotta look at Linux's updates. That's right, he said the bottom was in 4 days. So he's calling it after earnings, yeah, I mean, that could still be. Could see that, just a little sell-off from earnings, not a huge move, but just a little to the downside. Yeah, 12% swing. The higher it swings up on the moves, the more it's going to swing down. Right? So it's relative. These lows being built. The highs, and it's increasing. There's a break on VWAP for SPY. A little bit. I have not many plays today. Beauty sleep. Nice, tasty. Well done, man. Got shares. No, I back at 18. Yeah. Yeah, we ripped all the way up to that resistance line. The final resistance line from that it built back here starting in June. Touched it and resisted it. Surprise everyone. December 80 calls on GME. For earnings though? The thing with those is those aren't going to get much. I mean, yeah, unless we get a huge move, those aren't going to see much action for a while. You'd need at least $10 in the stock for this to probably even move much at all, and that would be hardly anything. I don't know. I would try and price in a move between here and $30 or 27. And then if we break there and go above it, then you can start pricing in a move for 80 or whatever. But that part of the money is just not going to move much. Yeah, over 30 on GME might not really be a thing anymore. We'll see. We'll see if it's still broken if it gets above 30. What if? What if it opened up at 30 bucks and then kept going? Yeah, you get one. I don't know why there'd be such a big surprise on their earnings. The only surprise I think that we're going to get with them that's possible catalyst for a big move is an acquisition. Which, I don't know if that's an earnings type of thing to announce. I wouldn't say necessarily, no. Just kind of when it happens, when they're ready to release it or whatever. I want to see this Linux update. Alright, we read this yesterday. Go back to yesterday's stream if you want to listen to it. Where are we update to? Oh, this is an updated one. Ah. On the bat signal. I still don't understand what's going on here, really. This has always run up before the price. This time the price is running up also. It flipped. So he's flipping from long to short, potentially, with that move. Note this circle the red parts in the previous runs. These indicate where we are in the timeline. Tracking well so far, minus the expected dip before the rip. We are 2 days away from what will be the bottom of the run. The bottom may establish itself tomorrow or the day after. Oh, this was yesterday. The day after would be Friday. So he's giving himself a window through earnings to be right. To be right. Little downwards move on the blue line is perfect. Will completely invalidate the run next week as if the blue line moves down tomorrow as well. If that happens, the run is off. Well, we don't have access to the little blue line, so how do we know if it moved down today? Probably didn't, I think. I don't know, actually. I don't know where that comes from. This was the run. This was the MOS. Linux just cashed out. Hope he did well. So I think we are 1 day away from full confirmation. Also, Ryan Cohen hasn't tweeted yet, which worries me. He normally would have tweeted yesterday or today. He tweets to establish one, we're going to go down more before run. What? Never seen him tweet to establish we're going down more before run. Oh, just go, yeah, so going down. Or run, yeah, whatever. Going down. To when the bottom is established, yes. We've seen him tweet that. I know it sounds like I'm spreading my bets with this tweet prediction, but I'm not. Just stating what I observed over the last 2 cycles. I will have to flip long tomorrow or on Monday. I mean, flip long, is he short? Does he just mean just add to his long? Or open up his longs? Barbecue, don't do it. Doing the VWAP chop. Right where I like to enter positions.
in particular is I bought one of the 225 calls for this illustration, sold 2 of the 240s, and bought 1 of the 245s.
Coming down a little bit from
Creates
VWAP here.
skewed call butterfly in which there's a $15 wide debit spread and a $5 wide credit spread. The importance of that is it changes the dynamics of this risk profile. As you can see on the screen, there's not theoretically any upside risk. That's because those spreads are not equal. If it was a $5 wide spread and $5 wide spread, you're going to have risk in both directions. In this case, how it's structured, there's only risk in one direction, and that's a lack of upside or downside move. In real time, Salesforce is trading for 223 and some change. Because we bought the 225, that's our anchor strike here. It's the biggest option in this trade. And it's a $4 debit as illustrated. That break even is 229. This particular strategy needs some help from the stock. It's going to need,
I guess, Tasty, the problem with that option is
3% rally to break even in that.
You're not going to hold it until it's
so know that when doing this. But it does have the opportunity to expand
in the money.
As much as an
You should be trading that.
If it
you
perfectly
get that far out of the money in that
240.
much time. You know what I mean?
Not the most likely of occurrences, but possible. If it does, however, rally
Unless you're planning on going on a vacation.
245, you stand to get back 500 of that, and it peaks out.
You're not going to look at anything. You just want the exposure.
$600 at max profit. So
you're on your brokerage every day.
If it runs all the way to the upside, make 600. If it perfectly pins,
if it runs up to 30 and you're up 500% on those, then it's getting resistance.
It's a bullish strategy, no
upside
risk, and it's risk defined in the event that sometimes you're wrong in the assessment of what might happen. And in this case, we know that risk going in. So 229 break even, bullish strategy to the upside here, building on some of this excitement now post earnings, Ben.
240 targets that July high as well. Well, 238.70, 238.22 now that I look at it, but right in that same area. I think in terms of the bearish standpoint here, I'm just kind of looking at the downside here. I know, again, with that stance, you're more focused on the upside here, but as we hold above 200 right now, still very bullish. The real line in the sand is what I'm seeing right around that 195 level. You can see it's the area of consolidation we formed prior to the one that we're currently in. But yeah, I can see potentially here how this stock could work its way towards the upper extreme of this range here, Alex, and potentially target that 240 area that you have your eye on.
Good stuff, and most importantly, if it does test 190, you know the exposure going in. It's $400 as opposed to, if you're a shareholder, a lot bigger number potentially depending on how many shares you have. That's going to do it for this segment. Thanks as always for Ben and his help here. But coming up next, we're looking at Lululemon with Renita Young.
Gen
Earnings preview
on a cruise.
This is a big earnings event still on the calendar.
Just kidding, she
Excited
hates
for
cruises.
this one. See what to expect right after this.
GNS down 10. Yeah, it's silly. Part of DFE, like how his worked so well, was he just held those. This one's way out of the money with a ton of time. Remember how long he held them? Like, that's insane. To not like take profits on those. I'm assuming he took. No, actually, he didn't. He held those. I think he ended up. I don't even remember. But at that point, he had way out of the money calls with a ton of time. He definitely took profits on some. But he held it for so long. They got so. They got deep in the money. I think he exercised a bunch too. Yeah, on one of these dips, he exercised a bunch. I guess it just depends on your strategy and how you want to play it. I would rather just fewer of them and at the money.
kind of regain that composure and get back into you know, a better position here?
So a couple things. I thought about this. If you just consider their business, they can improve the scalability. In other words, increase sales per customer by adding additional services. I think that's one way Chewy can effectively grow its way back into better profitability profile. Let's put it that way. I think at the end of the day, also, you have to consider, if that's feasible, whether or not, again, the valuation multiple is justified. And I think if you just look at the moving averages you mentioned, below the 50, below the 200, those are basically downtrending moving averages. And so I think right now, based on the trend, it's very powerful. If the trend is down, don't fight it. And I think at the end of the day, you know, Chewy effectively, you know, is facing a lot of competition. They need some scalability in operations. If they partner up, let's say, with companies like Amazon, a Walmart, for instance, that might actually be a good thing to, again, pair up the middle ground, if you will, the warehousing, merchandising, and so forth, with a very scalable business like Amazon or Walmart.
You know, George, what my real big takeaway from this is that context matters as well. We look at this on the surface, you see a stock that's down nearly 12%. It's a brutal reaction, but it's down $3.24. The market maker move yesterday was almost $4. So we had looked at on Monday selling an iron condor, which is not a strategy you would think that would have done well in a stock that's down 11, almost 12%. But I just checked, this thing would have been up 50 cents, even though the strike's been tested, because implied volatility is so juiced into some of these earnings. Expectations oftentimes really settle the score, and this is one that was expected to move a lot. So when you put that context in, I don't think the move, while it's disappointing, is as bad as it looks on the surface. But George, we'll leave it there. Appreciate it as always. Great insights, and have a great rest of your day. Thanks to Ben as well for joining us here on Next Gen Investing. He'll be with me tomorrow as well. Coming up next is the Watch List right here on the Schwab Network.
GME, perfect little bouncer off the 180 moving average. Up 0.7% now. Barbecue's green. What percent? I got stopped out on my SPY calls. I had to step away, so I set a generous stop loss and made a generous move to the downside. Coupons up 5 today. Lions up 2.5. Got run up 2. Sounds like what Teddy might be doing. Wait, what's that in reference to? GNS is down 10 now. See if it finds this trend line. Not a real good spot on the bottom. Buy coming back up to VWAP. Chop, chop, chop. The last new clip I was talking about. We would team up the Amazon for distribution. Oh. I wasn't even listening.
That's had a really good year, Nicole, having a really good day today.
Should we team up the Amazon for distribution?
Upgrades it from a buy to a hold.
They've tainted Chewy since Ryan Cohen's left.
And obviously seeing B2B will become material drivers.
Supposed to compete with Amazon, not team up with them.
So that's some good news there to help it get going. And then we take a look at another name, and that is CrowdStrike. A big move this morning off the earnings, and analysts raising the price targets on CrowdStrike. What are your thoughts there?
Yeah, CrowdStrike up 8.6% as we get to midday. Their earnings, big earnings beat, 74 cents a share versus 56-cent estimate. That's a 40% beat above the expected earnings per share. Second quarter revenue, $731 million versus $725. Only a slight beat there. Revenue growth, 36.7%. Gross margins, just under 80%. As you can see, they're keeping a quick or a tight hold on expenses at $282.9 million. Research and development expenses, $179.4 million. Ending, this is another one of those names. They are a cloud-based cybersecurity firm. Obviously, in the world we live in right now, Nicole, a cybersecurity firm like this stock is quickly becoming the gold standard in cybersecurity in terms of cloud-based. So, real strong day, and like I said, another name that is adding to its already gains for the year, Nicole. A really good day here for CrowdStrike, up 8.5% as we get to midday.
Understood. Yeah, I mean, it's unbelievable. These two names are both incredible. I mean, Shopify's up 18.5% this week, and CrowdStrike with today's move is up over 8% for this week. So anybody
EPS and revenue both beat.
In 1 week.
It's sold off
Kevin
on it.
Hanks, appreciate it. Now,
Maybe like the guidance or something, maybe.
Ken Van Leeuwen's with us, Managing Director at Van Leeuwen Company. Thank you for being with us. What's your big picture? We passed Jackson Hole. We have a lot on jobs and economic data this week, and earnings too. How are you feeling?
We're feeling actually, Nicole, very cautiously optimistic. I mean, I think we saw some interesting inflation data today that has us a tad concerned because goods inflation is clearly coming down, but it's the services sector that is remaining high. And of course, that core PCE is what the Fed looks like. So, we do listen to what, Chairman Powell said at Jackson Hole, where he foresees that we're going to probably have some more interest rate rises. So we're not thinking the interest rate increases are done, as a matter of fact, based on this latest data that we're
There's
seeing.
the move on SPY.
And while they raise rates, you think that could hold back the
That got
market or
stopped
actually
out.
pressure the market?
Well, it could pressure the market, and that's why what we're looking at at our investments that have earnings consistency is what we want to look at. And while we don't necessarily think we're going to go into a full-blown recession, not even maybe a recession, but we could have a definite slowdown. And I think that's what the Fed is trying to achieve here, is that, because they really do mean it when he says he'd like to have it at the 2% inflation rate.
I know. What about a recession? Are you worried about a recession? How likely do you see that?
We don't necessarily see a recession because
I got some
he's
calls.
very mindful, because I think
backup
of all
account.
the different economics. I mean, this week, of course, we saw that the employment figures, and they were a little weaker than were expected. But again, employment is still very high, and we haven't seen
Wasn't paying attention. I missed the
any
trigger.
weakening necessarily in that area
It was a little late.
at all.
Yeah,
I'm out of nowhere.
understood. So in the meantime, what do you say to investors in this environment? You have a Fed raising rates, you still see inflation, you have certain sectors that you like more than others that you think may work?
Oh, yeah. I mean, actually, we particularly like the healthcare space. I mean, I think that, not necessarily the big pharmaceutical companies that just were under pressure, from the recent announcement this week about the Medicare pricing, but clearly Eli Lilly with their Alzheimer's drug and their weight loss drug. We happen to like Boston Scientific. We still like the device companies. We like Vertex, which is a company that, is in the cystic fibrosis area. United Healthcare, of course, which is the premier managed care company, if you want to consider that healthcare. So we like that area very much in terms of being able to create earnings and revenue during a slower economic time.
Yeah, and you're concerned about the loan payments, student loan payments. They're going to have to repay some of those, right? People maybe were under the impression they wouldn't have those costs, and that goes into the holidays. So that puts a damper on certain sectors. What other sectors do you like? I know you had AI in there too.
Well, I mean, you know, you have to like AI and the tremendous strides that they are doing right now. And of course, the obvious pick there is NVIDIA. But also, we like Broadcom in that area because, you know, as a semiconductor company, because they provide chips as well, really, to Google. They are Google's largest supplier of their AI product. And the stock pays a very nice 2% dividend. So you can't get hurt while you're waiting. And Broadcom, again, is a leader just in semiconductors in general.
Would you buy it ahead of earnings, like a name like Broadcom?
Yes, we would buy Broadcom ahead of earnings for sure. Because I want to own Broadcom. It's a centralized holding in our portfolios.
I see. And then you talked about discount retailers and dividend payers too. I mean, when you talked about people getting, you know, tight in the purse, right? They have to be penny pinchers.
Well, you know what's interesting, and you mentioned before the student loan issue, and Burlington, you know, one of the largest off-price retailers, you know, in the top 3, they kind of, in their earnings report just last week or so ago, did warn of that, of the student loan repayments. But if we look at our other 2 big discounters, you know, the leaders in the space, for lack of a better word, TJ Maxx and Ross Stores, they did not mention that at all. And they actually talked about how they felt that their earnings and their comp store increase would continue to do well. Remember, Ross may serve a different clientele than a student, where Burlington may serve the student and Target may serve that, not a student, but a person, you know, a younger graduate who has to repay their loans. And TJ's has a unique niche, right? Because they're also, they specialize not only in that off-price, middle-of-the-road consumer, but they have that, what we'll call the treasure hunt buyer, the person who likes to go in there and shop around just to see, you know, who can afford to go to a department store, but just wants to see what they have and what their goods are on sale. So that's what TJ's is still attracting, I think. And they're forecasting some good quarters going forward.
Ken Van Leeuwen, thank you. Van Leeuwen and Company. Good to see you, Ken.
And Van Leeuwen. And Van Leeuwen.
Coming up next, we'll explain why Dollar General shares are down more than 10% today. Schwab Network. We'll be right back.
Yeah, he doesn't have anything to do with Chewy now. More foolish than video games and cat litter. That's what I was saying. He's kind of taking on Amazon. You're trying to take all the market share from Amazon with pet food delivery. And he did, and now they're talking about. And he's gone. That's what I'm saying. They're leaving his playbook and teaming up with Amazon for delivery. But that's kind of a joke. Because now they've built their own name and they have their market share, and so probably makes sense logistically and financially to use Amazon for delivery. But don't let Amazon get too deep into your supply chain and your workflow, because they will take it, undercut you, rob you, have it for their own. Just looking at some of the sell-off. So it looks like Big Lots gapped up on earnings and now it's come down. Got their dividend. Oh, this gap down was from? suspending their dividend. It looks like. Sign. Brad's down 3.6. Oh, it's also breaking that trend. That trend line. Not good. If you're long Rad, you might want to look at that. Up little head and shoulders on this channel break. SPY's climbing up some more there. If I had more patience on my entry for the calls, would have been a nice setup. SPY moving back down to VWAP here.
Go away, kind of working. We've seen as goes January, so goes the year so far, with stocks up in January and stocks up so far year to date. And then the presidential cycle has even played out as well. The last 3 quarters being the best 3 quarters of the presidential cycle. And then here, sure enough, softening in Q3, just as the presidential cycle tends to do. We can look at other indicators like Groundhog Day and a few others, but I think the point is these aren't necessarily predictive, but they're common patterns, and we should be careful extrapolating weakness in August or September to other months. I think as we get past this concern about whether central banks are done or not, and maybe see a little bit of
what Tootsie Roll's price right now?
Stabilization in the economic and
Still giving a
inflation
dividend
picture in the fourth quarter, maybe stocks are back on an upward path, but we're in a notoriously weak period for the stock market.
Yeah, Jeffrey Kleintop, always great to see you. Thank you so much of Charles
Thanks,
Schwab.
Nicole.
Thanks, Jeffrey. All right, coming up, NVIDIA is more than 200% higher this year. Our next guest still thinks this stock has plenty of room to run. We'll explain, coming right up.
Moving up there again. Selling 12%. Those calls. Something like that. Selling some more. GME back up 1.5%, almost a VWAP. Fiber coating still doing it. Nerd's wallet's at a nice price, maybe, huh? Options are not liquid at all. Grab the shares. Repeated bounces off this 8.5 level. Looks like it's cheating again. I like GM actually. Nerds has a bigger price range. Repeat the smallest move. It's done. From here it'd be 25%. Biggest move would be 140%. That is neat. Saw new docket drop says barbecue will assume the insurance policies. I mean, what does it actually mean? Palantir gap this morning? Gapped sometime. Yeah, that was. I think they had earnings. Oh. You're looking at. Yeah, it did gap down. 8% down now. Continuous moves. I'm excited for an acquisition on GME. That could really bump this company up into another level. Making a solid acquisition, bringing a bunch more revenue, getting market share of something. Like Funko. Nice little inverse head and shoulders on Funko, actually. Break of that range. Maybe they'll announce it this earnings. I don't know. Is that a normal thing? I feel like not necessarily around earnings. Companies announce stuff like that. Spy back to VWAP. Just hit resistance here. That's why I sold some. This high over here. Could still be an uptrend. We'll just see. Had to make a little move to VWAP, potentially. Rebuild some liquidity. Here it's grind up. Un momento, por favor. Thanks, Chinese John is in it. He knows what a cap is. Dragging a horse to water. He's in it for the long trade just because there's a gap. This is not the way. I have a short on Palantir, by the way. It's longer term, it's for January. So a shorter time frame, maybe it'll make a little bounce to fill it, but not necessarily. See if I find support on here. If it doesn't, I'm going to take a loss in the rest of these contracts. Oh, come on. Come on. Not the way, Spy. Definitely didn't find support. Flush through there. Ugly. Tops were triggered, it looked like. Yeah, I'm closed now. Dang it. Whatever, Spy, just keep chopping around. All day, not making any ground. Look, this is literally where we opened. And we're right back at the same spot. Dragging a horse to water is a great expression. Day trading every day. Kathy Wood bought at 29. RSI divergence finally started playing out, but it's holding on for a bit. Building a little right shoulder here. 4 more downs. $230. Amount of power to get puts. Amount of put power. Alright, sending alert out to the Theta Farm members. Opened up another trade today. Little inverse head and shoulders there on the hourly on barbecue. Just need that break.
Advertising them along that journey as well as in the digital environment.
Eyes coming down here.
So it's interesting to see in terms of e-commerce trends. Again, you know, it's what I stated earlier. The buying behavior seems to be impressive, and for our business particularly, advertising is becoming such a key component for these retailers to be able to give those discounts.
She's bought 3 times.
And for holiday,
She's sold, I think, too,
mean,
right? She's trimmed some.
Are you starting to see or get any sort of sense of what might be hot or not? Is it, toys? Is it electronics? Any way to tell that?
It's still early.
Too early.
Yeah, it's still early.
Yeah.
I mean, you've seen electronics.
But you do see that people are going to be spending.
It feels like that. Yeah, like again, if I go after, you're looking at these, I guess, events throughout the year. So Prime Day being as big as it was, again, over 12 billion in terms of sales for Amazon. If I look at the lift across the rest of the industry, so the 30% uplift. If I look at our own business, for Criteo, we're seeing advertising continuing to scale, and all of that is about around this category. So I think it's resilient, and we call it shopping palooza, like what you have coming up. So you're going to have back to school, followed by Prime Day, Black Friday, Cyber Monday. So you're starting to come into this, end of Q3, beginning of Q4, which is just massive for the overall industry.
Yeah, and the advertising dollars, any way to quantify how much is being spent? I mean, are we back from the doomsdays of COVID? Remember, there was just no advertising dollars, and it's so fragmented on where the money gets spent. But what are you seeing there?
I think so. I mean, so to answer your question directly, we are absolutely back in terms of growth mode, but it depends in terms of which sector you're in. If you look at linear television, obviously that business changed dramatically. If I think about commerce media, retail advertising or retail media, that is the fastest growing segment within digital, which is, if you think about it, the projection that they say is commerce media will be larger than TV in nearly 5 years. I think today it's roughly 10% of all of advertising, and it's going to grow to 20. So overall, I think there's a tremendous amount of opportunity ahead, but it depends which sector you're in.
But this also, so much of this depends on the success of the retailer themselves.
Sure.
Because they will have the money for advertising. I mean, if the retailer is flailing and suffering, they're definitely not going to have money for advertising. That's not going to help them, right?
Well, think of it this way. It's not the retailer, it's the brands who are spending at the retailer. So an example of that is a typical retailer on their typical sales makes between 2 and 4%. That's what their average is. Their margins on advertising, so the retailer acting almost as a media company, is making between 70 and 90% margin. And there was a stat that I think came a few months ago. The CFO of Walmart said in 5 years they're going to make more profit from advertising than their other services than the goods sold in stores.
Right.
So if we think about what that actually means, advertising is becoming a major contributor.
And you said that with Amazon too.
Yeah, well, Amazon started reporting the volume of their advertising revenue. I think they did it back in 21.
Right.
And that business is nearly $40 billion, right? So if you think about the scale of that and how meaningful that is, and that translates back to value for the consumers. You couldn't do Prime Day or other of these events without that contributing to it.
Right, and you noted, I mean, when we think about Amazon Web Services, don't leave this part out. Because it's a big part of the story. You did leave out Halloween in your lineup of maybe some spending opportunities.
I think there is.
A lot of people spend on that too, but
it's Halloween.
I know it's not as big as Black Friday.
But we're all
Monday,
shopping. I mean, the thing about how we shop has changed, right? Like, because now we go online, we're going to a store, we're seeing it all around. Our behavior's changing.
Yeah, I mean, I already saw Christmas trees at Walmart.
It's too early.
The Spirit, I know it's
too early.
The Spirit pop-up shops already on 57th Street. The pumpkin spice lattes are already
It gets confusing
out.
when you have the pumpkins and the Christmas trees.
Yeah, it's a lot. It's a lot. It's great to see you. Thank you so much, Brian Gleason, CRO of Criteo.
Thanks,
Thank
Nicole.
you very much for being on the show today. All right, coming up next, we're going to be talking all about jobs, looking at the U.S. economy and what you need to know. Our panel is ready. We'll be right back.
Here's a little dump on SPY, back into a range, back into the chop. Had to be quick at taking profits today. Dilly-dallying around for continuations. Not getting them. 10 minutes to power hour.
You know, the labor market's still paramount, I think. We're keeping a very close eye on the numbers there. Still expecting that we're going to see weaker job numbers, but I agree with Steve that the numbers right now are still very solid until we start seeing some signs that more companies are laying off workers. We're not going to see much slowdown in the consumer spending, and that's what's keeping growth going. We expect a very solid number for the third quarter and probably still see some momentum carrying into the fourth quarter. It's really more 2024, ultimately with the Fed probably keeping rates where they are or maybe even going higher, does that start to really impact business decisions and lead to job cuts? And eventually that will start to have the economy roll over. But we keep getting delayed. There's still more runway for this expansion, and that likely extends into next year.
Right. And, we got in GDP a little lighter. When you see some of these things happening, it's doing exactly what, the Fed wants. But at the same time, is there a warning for households? Stephen Rasciuto, are you worried for them because some of them are on a buy now, pay later theme?
Look, at some point in time, as Ben indicates, there will need to be a recession because there are latent inflation tendencies in the economy. And yes, some households will be damaged as a result of that. Unfortunately, that's the case. If we continue down the path we're in and households are allowed to continue to leverage up as much as possible, then you're going to wind up in an even bigger credit position down the road. And this is the problem for the Fed. What's been happening right now is the equity market is giving CEOs shelter not to have to lay off workers. And because it's been giving them shelter not to have to lay off workers, it's made the Fed's job that much more difficult. The other thing that's made the Fed's job more difficult is fiscal policy, which is somewhat, very expansionary at $1.5 trillion structural deficit. And on top of it all, you have an environment where the long end of the yield curve is saying, well, inflation expectations are really anchored. So long-term rates that should have gone up more than they have, they've gone up a whole 100 basis points while the Fed funds rate is up, 525 to 550? That's also been giving credence to the whole idea and keeping the economy more robust and forcing the Fed to do more than it needed to do originally or what we originally anticipated. And it's going to continue to be a problem going forward.
Yeah. And you're both watching to see the wage gains and some of the trends there. Ben, before I let you go, you were also looking at quit rates too, right? And that churn.
Yeah, we are seeing that, across the board, there are some signs of weaker labor demand, and workers are responding to that by not getting as much pay if they switch jobs. And so we're seeing the quit rates have come down to pre-COVID levels. That's again a sign that things are working in that slowing direction. But, with as many job openings as we have and as many sectors where there are still firms starving for workers, we're not going to see things slow down overnight. It's been much more protracted process than we expected. And again, that's extending the expansion, I think, through the end of the year. We're still on recession watch as we go into 2024, but, we keep seeing things move down the road.
All right. Thank you both, Ben Ayers and Stephen Rasciuto. Wonderful to see you both. Really appreciate it. Good preview for tomorrow and the big jobs report. Thank you. And thank you, friends, for joining me each day here, 11 a.m. and 2 p.m. here on Schwab Network. Thanks for being with me on the watch list. I'm Nicole Petalides. Keep it right here. Market on Close on Schwab Network is next.
Good afternoon and welcome to Market on Close here on Schwab Network. I'm Renita Young. I'm filling in for Oliver Rennick, and we've got so much to get through today, so let's start things off by taking a look at markets, which have flipped into the red, the majority of them, in this last hour left in the trading day. All are down except for the NASDAQ. The NASDAQ 100 is about 0.4% higher. All other markets are lower. The S&P 500, though, hovering around unchanged, and the Russell 2000 and the Dow are lower as well. Time now to welcome in Kevin Hinks, Senior Equities Contributor. Kevin, thanks for joining us. Of course, we know what we talk about at this time. Let's look at market action that we've seen today, quite different than when we were talking in the morning.
Yeah, you're right, Renita. This is a market that started the day in the green and has just continually lost its momentum throughout the day. Other than the NASDAQ, which still remains relatively strong on the day, but Salesforce was leading the Dow Industrials higher early in the day, and now that has turned negative. So there might be some hesitancy ahead of tomorrow's non-farm payrolls and unemployment number, Renita. The expectations there, 170,000 new jobs, 3.5% interest rate, and wages. The key wage data, up 0.3 on the month over month and 4.4 on the year over year data. And that's flat with a month ago. So the two key inflation points came in higher today. Tomorrow is expected to come in unchanged to last month, but that's the consensus. Let's see what tomorrow brings, but it should be a pretty important morning. I don't know if the trade will last into the afternoon, Renita, with a pre-holiday market, but at least in the morning, we'll be paying attention to that.
Let's talk a little bit about today, the inflation data, the reaction to it. As you noted, it was pretty muted. Were you surprised by that? Did you expect a little bit more reaction?
Well, even though the year-over-year data points both came in higher than last month, that was the consensus to what they would be. And if you look at, let's say, the headline in PCE, that year-over-year that went from 3 to 3.3%, well, that was the expectations. And if you enter in the possibility of crude oil futures higher, it's not really surprising that energy is going to remain higher. The core, that's another story. That ticking up a tenth to 4.2%.
Very similar chart.
Is in line with what the expectations were. But once again, that is a number that maybe, possibly puts a Fed rate hike at least back on the table. Doesn't mean it's going to happen, and it certainly doesn't appear like it's going to happen for September. But maybe if the data starts to turn firm or higher, that Jerome Powell may have to decide something in the November meeting, Renita.
Certainly with the jobs report tomorrow, if we get another strong report, same situation. It may turn the Fed toward that direction, yes?
Yeah, I mean, I think the U.S. dollar being higher today has worked against stocks, but yields have actually been lower throughout the day. So maybe we should watch that U.S. dollar. Maybe it's that firm economic data that has caused the dollar to come off its recent lows. If you looked overnight at some of the European data, it was actually quite strong, and some of the inflation data was higher than expected. So that should, by definition, weaken the U.S. dollar, but our numbers came in and the dollar stayed strong and rallied. So looking at that data as it came out, it puts a lot of weight on what we're going to see tomorrow for non-farm payrolls. Remember, non-farm payrolls unemployment, the #1 data point of the month. It's coming on the first of the month, so we're getting it very early, but it's going to be a big number tomorrow. We'll see what the reaction is.
Well, we have more tech earnings coming after the close, and we have Lululemon coming. What are you watching for Broadcom specifically when it reports after earnings or after the market closes?
Yeah, Broadcom will talk about the momentum they have around data center products. I expect some of the guidance going forward to be a resurgence in smartphone demand, right? The iPhone 15 coming out. Maybe you'll see better numbers, better guidance out of Broadcom, but this is a company growing at an incredible rate. They buy back stock. They have a strong dividend. This is a company with some lofty price targets, as you know. So this is got the opportunity for a big move coming out of earnings. So yeah, Broadcom is certainly one. Piper Sandler raised their price target on them this week from $8.30 to $9.25. So the price targets are working their way higher, but as you know, this stock can probably move pretty significantly here on the earnings report. Coming up here, in about an hour, right after the bell.
All right, well, we will leave it right there. Kevin Hinks, thank you so much for joining us this afternoon. Now let's continue this conversation and welcome in Anastasia Omaroso, Chief Investment Strategist at iCapital. Anastasia, thank you so much for joining us. Let's talk about what happened today. I guess this rally that had been continuing for the past 4 days will not continue into the close. What happened during the session?
Well, we've seen a lot of this type of price action, just kind of a strong start and fading into the close. And, I really think that this price action in this, dead period of August, so to speak, is really not to be trusted because, there's very light attendance, there's very low liquidity, and I think there's a lack of buying appetite right now. I think what you do see is that any sort of buying appetite is once again focused in tech because that's what people tend to have high conviction in, but nobody's really going to step in right now ahead of payrolls, ahead of the inflation print in September, ahead of the Fed. And so, for now, I think there's this tendency to fade the rally.
Let's talk about today's inflation data. Were you surprised by the muted reaction? It was within line. It came in within the expectations, but did you expect more of a reaction actually?
Well, I think today's inflation print neither confirmed nor denied anything that we have already known. And what I mean by that was we do have this gradual disinflation, and it is gradual. It's not really going in a straight line. It may be stagnating here a little bit, but the markets sort of know that. And there's been plenty of talk of soft landing where you do have, if you look at the actual numbers they came in, the month-over-month change was right in line. The year-over-year change, whether it's on the headline or the core PC, was also right in line. So yes, it showed a slight uptick, but I don't think it's really enough to sort of upset the expectations going into the print.
Now we're about to start, well, we're already in the second half of the year, but we're about to start September. So what's your outlook on the economy heading into the end of the year? People are already forecasting what would come for the fourth quarter, but can you give us a quick view of what you might think may happen given the data we've received and how the market's performing?
Sure. Well, it is going to be back to school next week. And, I think with that, sort of you have this race into year end and how do you position? And I do think that after the reset that we had in August, there's a few factors that I'm looking for that are optimistic into year end. And things that I'm encouraged by, for example, is economic growth. And there's a lot of momentum in the third quarter that I think can carry through into the end of the year. Consumer is continuing to be incredibly strong. We had the latest Atlanta Fed GDP update. GDP nowcast update for the third quarter is now 5.6%, so still incredibly resilient. So I think that economic momentum supports stocks, supports sentiment. The other thing that we're likely to have is the Fed that if they don't pause fully, if they don't end the rate hiking cycle, they're going to be much more careful. They're going to go much slower. Maybe it's every other meeting, if not slower than that. So if that's the case, then that's a good environment for stocks as well. And having said that, with 5.5% Fed funds rate, I don't actually think we're quite at restrictive territory to meaningfully slow down economic momentum just yet. So I'm optimistic, and I think after the reset that we had in August, investors do come in September, and as long as inflation cooperates then and the Fed cooperates, I think that should be the all clear for stocks.
Give me an idea of what you think it would take for the Fed to meaningfully slow down the economic action happening.
Well, I think you would need to get into significant restrictive territory. And what I mean by that is there's an estimate of the so-called neutral rate for the economy, meaning what is the normal level of rates that neither restricts the economy nor accommodates it. And, if you look at the forecasts and the various economic models, that neutral rate has come down significantly over the years and is just below 1% in real terms. And by the way, when I look at the Fed funds rate, I take out the core PC inflation and I look at the actual real Fed funds rate, it's also just below 1%. So to me, it would take the Fed tightening significantly more, or perhaps not bringing down the rates as inflation comes down, and that would get them into restrictive territory. But I think we're far from that, and that may happen at some point in 2024, but I don't think it's a 23 event.
Okay, well, let's switch gears right now and get into some AI. With all the rapid growth that's happening in AI, we've already heard concerns about it as it relates to name, image, likeness in Hollywood. Are you looking at any potential regulatory actions that may happen within AI and impact the investment strategies?
I mean, clearly there are significant risks that are associated with AI. You know, what if some of those AI machine learning models are trained on bad data? What if they have an inherent bias? You know, what if you can't control, you know, some of the bad results that some of the generative AI generates? So there are definitely concerns, but I think it is too big of an opportunity set for the regulators to step in and try to control. I think there's absolutely going to be some regulations, you know, along the way and perhaps along the periphery, but I don't think it's going to be enough to deter the momentum of artificial intelligence. I mean, when I think about, you know, the FOMO, the fear of missing out, you know, maybe you have that in the stock market, but you also have that in the spending surveys, for example, of chief technology officers. And over 50% of CEOs and CTOs are saying that this is the top spending priority. And over 65% of those same technology, you know, procurement managers are saying they're going to boost their artificial intelligence investments in the next year. So I think given this momentum, it is hard to kind of regulate that out. So having said that, I do look at it as an opportunity, and we've had a bit of a reset in some of the artificial intelligence valuations as well. And the implied distance between where the stocks are trading and what the analyst forecasts are for their price targets, that distance has improved. So I think the risk reward has improved for stepping into some of the AI stocks.
That's worth noting because we've been hearing for a while that some feel like it's a risk of an AI bubble, similar to the tech bubble in the late 1990s. But then we started to see actual tangible products and services that are being offered, and partnerships like the huge Google Cloud event that happened this week that showed actual tangible things. So with these tangible examples, do you think it's still a risk of an AI tech bubble?
No, I don't think so. And, you know, you pointed out very rightly that these are tangible developments. If I look at a company like Broadcom, if I look at a company like NVIDIA, if I look at a company like Marvell and a lot of others, they're guiding towards the benefit of AI. They're seeing now, they're likely to see over the coming quarters. So it's not just hoping for that benefit to materialize in the next several years, but it's actually here and now. It's nascent, but it is happening today. So that's the first thing I would say. You know, the second thing I would say is when I look at the analyst models and what they're forecasting for artificial intelligence, it's not the doubling in spending on AI that a lot of industry forecasts are penciling in. For example, IDC, for example, projects that spending on artificial intelligence is literally going to double per year over the next several years. That's not what you see in some of the earnings models for AI beneficiary stocks. So I think what ends up happening is, to the extent that we go through this multi-year investment cycle of artificial intelligence, as AI take-up materializes, analysts will mark up their earnings estimates. As a result, the stocks may not actually be as expensive as they might appear because that EPS number is likely to trend higher.
So let's talk about the non-tech industries. How do you anticipate them to take advantage of the AI revolution? I saw something interesting with Deere when it reported its earnings a couple of weeks ago. But how are you anticipating non-tech industries to take advantage of the AI revolution?
I mean, any company, I think right now is thinking exactly that, is how do I implement artificial intelligence in my company? And because if I don't, I am going to be left behind. So AI should be a conversation in every boardroom and every industry vertical, and I'm sure it's happening today. Look, when I think about, the benefit of artificial intelligence, it is the potential for a big boost in productivity. And so that's why every company is entertaining the idea. You boost productivity, potentially you reduce the wage pressures, and that's why the margins for companies, for the S&P, is actually forecast to increase as a result of embedding AI.
I think you hit the nail on the head when you said it boosts productivity. It'll take less time to do way more projects and services. And then another trend that we're looking at is the actual IPO market. We've been looking at sort of a return of the IPO. Do you anticipate the IPO market to reach the heights of like in 2021 again in the near future?
Well, that would be nice to see, but no, I don't anticipate that we're quite going to get to the 2021 levels. But I do think that we have a chance here for the IPO window to somewhat reopen in the back half of the year. And the reason I say that is if you think about what is required for the IPO market to function is you have to have some certainty about a level of interest rates so you can actually price up those IPOs. You have to have some certainty about the economic environment. And now with recession fears being pushed off and soft landing being the base case, I would say that's a much more conducive environment for the IPO market. You also have to have some confidence in valuations and making sure that you're not IPOing into a market where valuations are at trough levels. Well, you look at the S&P, you look at the NASDAQ, you look at AI stocks, you look at semiconductors, and the valuations on all those indices have meaningfully increased over the last 6 to 8 months. So you put that together and with CEO confidence, by the way, and that becomes a supportive environment for IPOs. And then I look at the backlog. There's a lot of companies right now that are waiting in the wings for the market to stabilize and for the IPO window to open. So I think if some of the tests, like the ARM IPO and a few others, go well, I think we'll see more companies follow suit.
What about the impact of bellwether unicorns like Reddit, Discord? What kind of impact do you think they're having on the IPO landscape?
I mean, I think all of those, companies succeeding in the public eye is very important. And look, the IPO market has a lot to do with investor confidence. It's investor confidence that would be the buyers of IPOs, and it's also the CEO confidence to actually go into that environment. So I think all of that is part of market sentiment is very important.
All right, Anastasia Amoroso of iCapital, thank you for joining us this afternoon. We really appreciate the info.
Thanks so much.
Of course.
Take care.
You too. Now coming up, we'll be joined by the president and CEO of Build-A-Bear. The stock is up over 90% on the year. So we'll find out what's been working and what lies ahead for the company. Market on Close on the Schwab Network. We'll be right back.
Love me some Build-A-Bear. Well, GME ended up 1.5% up. Fish is back down 1/4. That's bouncing there. It's down 10.5. Fiber coating still. AMC up 1/4. Got about 40 minutes to close. Choppy day on the market. So we had chop followed by chop this time, which looking like some rolling over. Steep price action starting to taper. MACD flipped. See if it picks the trend back up here at a less steep of a trajectory. Or we could be building a head and shoulder and start to come down. Find some support with maybe the 50 moving average, or yeah, here's our resistance. Little head and shoulders outside the resistance. Potentially seeing a top here. Cup and handle's gone. So chop potentially. It's still maybe filling that gap before new lows. Sucks for those puts. Could be a big cup we just formed. Not even with the highs back here, but just with these levels. Where do you have that drawn in? Okay, time to erase it. Better. Alright, look at the MACD. That nice uptrend we're in. Put a horizontal line up here at that gap. Might have a little further push up to there, but not necessarily. Got a high here, which is maybe that cup. Potentially all the way back down to 442.97. Still being a bullish formation for that handle. So we do start coming back down, we start showing reversal, maybe the 50 moving average in this area. We'll probably close those puts and probably not go long, but keep theta farming and maybe go long for a retest of this high up here and a gap fill. Because I don't know if my January time frame is going to be enough. Mullen? Holy Mullen. Down 10%, huh? 10.25 on Mullen. Looks like news came out on that. Lyle's lawsuit against large stock brokerage firms. That's not new. Buys back more shares. That's stupid. Yeah, there's some news on Mullen. Not a normal drop. No news, just crashing. There's something that came out with that. We just don't know the news yet.
Price John, President and CEO at Build-A-Bear Workshop. Thank you so much for
Here we
joining
are.
us. Now, coming up.
Thank you. Come out and build a bear with us so we can give one to a child in need. Love to see you.
I think I will. I'll take you up on that one.
I love that.
All right, coming up next, it's Options Corner. Tom White will join us to show some unusual options activity in the market today. He'll be looking at some bullish trades in Amazon, Mattel, and Broadcom ahead of its earnings report. Market on Close will be right back.
I remember when I first
In the chain for open interest, I went with GME 25 call, 30 call, 915. Very, very bullish. But at least you did some DD before you went for calls. DD on the strikes. Wait, 915? That's not a strike. About 2015? Oh, wait. Yeah, that's not a strike. Oh, it is. Sorry, confused. Yeah. That's the September OPEX. 950. Okay. So that's, yeah, it's an earnings play. That is an earnings play. Very bullish one. Well, maybe it'll work. Now, if you're going for an earnings play, why didn't you just get shorter time? Or are you just trying to capture a potential run up after earnings also? I guess that covers you if there's a bit of a gap up and then it keeps going. That's the only scenario where I would get a whole month for an earnings play. Okay, yeah. Barbecue better have a Friday rip. Just wants to. Yeah. No, that way it gives you exposure if there's a gap up and then it keeps going. Now, if there's no gap up, do you plan to sell after earnings? Or are you just going to hold? But yeah, the options on GME do suck. Certainly the monthlies, you're going to get more liquidity, tighter spreads.
To take over the Super Mario Brothers movie as far as global sales. But this is a phenomenon that's probably going to turn into a giant franchise, right? And that's why I think you've seen, we typically don't see Mattel shares up 24, 25% in a year. So it's pretty astonishing what's going on here. And you expect more films to come out. And then the partnerships going into the holiday shopping season are probably going to be all across the board. We'll have to wait and see on that. Christmas is coming up soon. But we did see some unusual option activity in there. Really short term, September 8th weekly option, so only 8 days till expiration. Trader bought 5,000 of the SEP 22.5 strike calls, average debit of about 25 cents, so that break even of 22.75 over the next 8 days. That's only about 2% above the current share price, so someone's expecting this rally in the shares to continue. And if you look at call volume in here, so typically Mattel options don't trade a lot of volume, right? About 6,000 or 8,000 calls have traded on the day. Over 60% of those are just on this one strike. So this is a big position in Mattel shares and also the option market. So yeah, somebody thinking that we're going to see an extension of these gains. You only need 2% to get above there. So buying pretty cheap options, but short duration.
But it sounds like it depends on how long of a tail this Barbie mania and everything else that Mattel is doing right now has.
Yeah, and who knows? I mean, I don't even think I have to see the movie because I've heard so much about it here in the office for Renita.
Really? Not enough? You haven't heard enough?
I've heard enough, and plenty. Yes.
Okay. Well, lastly, let's take a look at Broadcom. Now, somebody's taking a change ahead of earnings. What are we looking at?
Well, it's surprising. The option market's actually not pricing in a massive move for the shares, about 4.2% either way. I mean, this is a really high-priced stock. It's just under all-time highs of about $923, so it's had a good run, up 65% so far this year on this one too. It's known for the chips, so, they broadband, wireless, smartphones, infrastructure, data centers. Now, AI is why the stock has moved up so much this year. On the back, it's NVIDIA's little brother here. Yeah. But it only makes up about 15% of their revenue on sales. That's expected to jump up to 25% into 2024. So that's why the hype is built up in here. Some of their other businesses like the smartphone and automotive and industrial have lagged a little bit. Those have supposedly started to bottom. So they're expecting a re-acceleration in those parts, which are being helped by AI at this point. AI kind of offset some of the losses there, but saw some call buyers in here. We typically don't see a lot of option volume in AVGO either. But we did see some short-term positioning in the September 1st weekly cycle. So just 1 day to expiration. You'll capture that earnings event after the close here in about 20 minutes or so.
We have more
they
data
bought
tomorrow.
1,700 the 920 strike calls. So basically at the money calls, they paid a debit.
U.S. non-farm payrolls, that's more jobs data, so that could actually move the market
that break
big
even
again.
of 939.50 over the next
That kind of goes
24
with Jolt's
hours,
jobs data, U.S. unemployment rate,
just
U.S.
below
hourly
2%
wages,
above the current share price with call
ISM
volume
manufacturing.
about
A lot of that's
3 times
pre-market.
normal daily average volume that we've seen over the last 5 trading sessions. So yeah, somebody just taking a bullish play here to the upside, and with the option market pricing in about a plus or minus $39 move, it's not out of the realm of possibility that we could see that.
And we have a long weekend.
On their largest customer, Apple, and whether or not demand is there.
That's part of it, I think, and that goes back to the weakness in the smartphone, because smartphone sales for even Apple have decreased the last couple quarters.
Right.
But will that be offset by the hype that AI has created? But remember, NVIDIA was the same thing. They blew out earnings last week, but then actually fell post-earnings. So we'll see if that happens to AVGO here.
All right. Thank you so much, Tom White,
Josh Corbin again.
Senior Options Contributor. Now coming up, we'll
was I
dive
singing?
into commodities with Bob Iacchino, and then we'll get an
Don't
update
sign
from
a
Alex
lullaby?
Coffey on Intel as its
Get sleepy
CEO
enough.
has some positive comments
I don't know if I
on
sang
its
again.
guidance for the
Thinking
third
out your ear
quarter.
and stuff.
Market on Close will be right back.
We have an RSI divergence there on the hourly on SPY. $15. Come on, barbecue. Break out of the barcode.
This is about now, especially since we had a relatively muted response on a whole to the data.
You know, it's interesting. Look, I think you sort of listed it there correctly, because the dollar had the most extreme response, I think, on a percentage basis versus the way the dollar index normally moves of basically anything out there. I mean, you had sort of benign PCE numbers versus expectations, but then when you looked at them a little bit more closely, core PCE higher than expectations on a year, higher than last month on a year-over-year basis. Headline PCE higher than last month on a year-over-year basis. Month-over-month, a 0.2% gain. And the dollar seemed to be the only thing responding to it. It's interesting to me because there's two things I always go to when I see the dollar move. Number one, I want to see if the expectations for rate hikes have changed, and generally they haven't on a one-day move. You might see a 1 or 2% change on those expectations calculations, but that's about it. But also we saw yields basically lower today versus yesterday. So the dollar move was a little, I don't want to say suspect, but it might actually be the canary in the coal mine, kind of leading things in the direction they may be going in the future. You look at yields on a monthly basis. Weekly yields are down, but monthly yields are up everywhere except the 2-year. The 2-year is only down 1 basis point for the month of August, but the yields everywhere else are higher by double digits.
So then what are your thoughts on this recent strength that we've seen this week in crude oil? I mean, right now it's up about 2.3% on the day. It's still hovering near its highs of the year. What's your thoughts on this move?
So I've talked about this quite a bit with you and your team. I think we're having a little bit of a shift in the seasonal effects. Normally we get these seasonal prop ups at the beginning of the summer driving season with travel, but there was so much revenge travel post-COVID that there almost seems to be a little bit of travel fatigue going into the winter. That's usually when you get a little bit more of a kick from the jet fuel demand. But when you look at a barrel of crude oil, that's not much of the barrel that's specifically to jet fuel. We're winding down the summer driving season and we're looking at record stockpiles. But when you look out into the future, which is what futures markets do, obviously, you're seeing a lack of possible production maybe 6 months, a year and a half from now out of the U.S. The U.S. is the #1 producer, but they're doing that with fewer and fewer rigs. We're about 40% lower from the last time we were producing anywhere near this level in terms of rig counts.
That's pretty interesting. What I also find interesting about this is that this is around the time where they begin to change the fuel mix, which could also kind of mess with prices on the consumer level. But I want to switch gears to the jobs report tomorrow. What are you watching for this report? Any specific part of the numbers you'll be keeping your eye on?
Well, I think overall everyone would agree that at least for this week, maybe even the last 10 days or so, the U.S. economic data has been weaker than expected. Still stronger than our peers, but weaker than expected. I want to see if that happens overall in the non-farm payrolls numbers, because this would be the last shoe to drop to where the Fed wouldn't really be able to say that the economy is too strong. We still have not had a negative payrolls number. We haven't had a few consecutive months of maybe 5-digit gains, but you know what I mean. Less than 100,000 in gains, so 96, 79, numbers like that. We haven't seen that. And as a matter of fact, you've seen the unemployment rate drop. So we can talk about the quality of the jobs that people are getting, but they're still getting them and they're still spending, as we saw in the consumer spending numbers today. So I'm going to be looking for any difference in wages. Have they gone up or down? And have we started to sort of begin a trend toward fewer and fewer non-farm payrolls jobs being added? I don't know if we have yet.
All right, well, we'll be waiting anxiously for the last shoe to drop. Bob Iacchino of Path Trading Partners, thank you for joining us and giving us that context. So now it's time for Developing Story, and for that we'll bring in Alex Coffey, co-host of Next Gen Investing here on Schwab Network. Intel spiked higher this afternoon. Tell us what caused shares to rise, Alex.
Yeah, CEO of Intel, Pat Gelsinger, is speaking at a Deutsche Bank technology conference. And while speaking during that conference, he provided some insight into how the company's third quarter is going thus far, with some optimistic comments. First off, saying that they are tracking above the midpoint of their prior guide, and that they're feeling good about their third quarter progress. While speaking, he also spoke a little bit about AI and the importance of AI for not only their business, but
we still haven't seen news on this yet.
As a whole. CEO Pat Gelsinger said he believes that AI will affect everything, and that he sees AI as a positive driver for Intel. So I think this, amongst, of course, the narrowing of that guidance, kind of steering the street to the top half of their guidance range for the next quarter, I think is leading to some optimism here for Intel, which has been a pretty strong performer thus far year to date, up about 33%. Of course, Intel had struggled for many years
still a bottom there
leading into this one, and so a little bit better tone for investors thus far, but analysts are still sort of in the a wait-and-see camp, I would say, in Intel, and waiting for Intel to sort of show the street more. Because if you look at the entire ratings breakdown, about, let's call it 2/3 of analysts are in the hold camp, with a modest split amongst the balance between buys and sells.
Looks like Intel is trying its best to differentiate itself from HP, and we'll be watching that. Alex Coffey, thank you so much for giving us that info. Now, coming up, let's close out the market session and get the big picture from the team at Charles Schwab. That's up next on Market on Close.
10 minutes of Fugazi. We'll bounce back to SPY, back to VWAP. And let's see what we got. Barbecue up 1%, SPY up 0.04%, did nothing all day, just chopped back and forth. GME up 1.5, had a pump this morning up to that resistance. Rejected, so expect it to stay below that resistance. See what happens after that. GNS came down 13.24. See if it finds support here on GNS. Mullen sold off for some reason. Not sure what the Rad's down, broke out of that upward channel it had. Let's see, Dish is pretty much flat. HE is up 2.5%. Yeah. I don't think I did any. No, I didn't open up any positions. I actually have to call in E-Trade. They're moving over to Morgan Stanley. You call in for some reason, open up any positions on there. Not much to do on there anyways. I'm just kind of burning theta. Hoping they end up working out. Shorter term stuff is all pretty much worthless, so no reason to close it. Longer term stuff, yeah, hasn't started playing out yet. Eyes coming down there, 5-minute finger slap. Did trade the SPY today, actually. Green. Up 5% on this account. And traded some on the long term. Goes pretty close to break even, maybe a little bit green. I don't even know. Took a short, took another short, added, closed some, added, closed some, closed the rest. Took a long, stopped out, took a long, closed some, closed the rest. Or she got stopped out on that one, then I was out of power. Oh, yeah. And right back where we started SPY. SPY is now red. You have non-farm tomorrow morning, 8:30. So another potential catalyst. MACD flip bearish. We've got red to the line moving average now as we coming to close on the hourly. Thinking we probably get some pulling back. Maybe we keep going, fill that gap. Yeah, see how today kind of pushed the Bollinger, the upper Bollinger up. Oh, I feel like some pullback, and this also have this cup. This is a cup and a retrace. Potentially all the way down to 442 or 443 area. Or move back up. Not sure if it'll dig that deep or not, but let's see what non-farms give us tomorrow. Are we going to pass $1 soon? Not without a catalyst, I don't think. If it's going to pass $1, then it's probably going to be even higher than that. You know what I mean? If it gets that high, it's probably going to be even higher, basically. $0.67. Yeah, you're probably kind of stuck. You want to take losses, I would look for this 38-39 cent range. Got losses. It resists there and doesn't break out. Otherwise, you're probably just going to hold until either dissolved or you have shares of a new ticker, or I don't know, something. But that's what I got. Thanks guys for your support today. Came in late, but you guys still showed up. I appreciate it. Got 21 likes. 21? Viewers really died off. At 1, that was weird. Thanks for the likes today, guys. Thanks, Christopher. Thanks, Lords. Don't know, never seen you. I'm Cowboy Jake, but thanks for showing up, man. Thanks, Like You Up. Thanks, Tasty. Thanks, Rocket. Guts. Thanks, Busy Bee. Kitty Daddy. Thanks, Tasty. We'll see you guys on Discord. See you on Twitter. Got 2 minutes to close here. 21 likes, Kitty. 21. I was saying the viewers really dropped off around noon for some reason. I'm going to bounce off of that support again, maybe. See you on the PP show. Dude, thanks guys. We'll see you tomorrow. Data in the morning at 8:30. Get some direction then. See where we head. Head off. Have a good afternoon. And we'll see you on Discord. See you guys. Peace out.